Yes, yes, yes. Welcome, everybody, to the live webinar. Today is going to be an absolute masterclass. Nothing short of the name. I'm very, very excited. This is the first time I'm doing this, especially in this fashion, to be quite honest with you. We got a lot of YU members here. And we also have some non-YU members here. Some of you guys might just be tuning in because you're interested in trading them for the first time. Some of you guys might be beginner traders. Some of you might be advanced. Some of you might be intermediate traders. So today we are going to deliver an absolute masterclass for all. And we're going to be tackling so many different things, to be honest with you. It's going to be an absolute evening. So if you've had any plans for Netflix, if you've had any plans to go meet your boys later on or watch a K-drama with your girls, you better call those plans off. Because tonight is a Yarimi University free masterclass. Yes, free. You guys are going to be like, oh my God, how are you doing all of this for free? Yes, just because. Perfect. Are you ready for what could be the most important 90 minutes of your trading career? Drop a 1 in the chat, but don't forget the chat. I don't want the chat anymore. Let's get straight into it. Okay? Let's begin. Today's masterclass is going to be packed with actionable insights that could change your trading trajectory forever. And I don't mean this with any sort of intentions that are unclear. I'm absolutely clear with what I'm saying right now. This information could change your life forever if you process it properly. If you process this information properly. Please don't be around no distractions. Absolutely lock in. Because for those of you guys who are not YU members, this is actually a privilege. What I'm about to deliver right now is absolutely a privilege. Okay? This information is vital for you to become profitable. So it's absolutely necessary that you are engaged and you take it in. Now, if you're anything like me, you know that the skill of trading has the possibilities to really change everything for you. It can change everything, every single thing for you. It has the possibility. Okay, multi-trillion-dollar daily market. You think a market of this capacity, of this volume, doesn't have the capability to change a person's life? Of course it does. Of course it does. And that's exactly why I created this 3-step process to profitability, to help people like you capitalize on this massive opportunity and skill. Because once upon a time, I was in your same shoes. I don't know what stage you are at life. Some of you here might be millionaires already. Maybe you don't need my advice. But for those of you guys who are not millionaires, pay attention. This information I'm about to give you can genuinely cause some serious changes in your life for the better. But before we dive deep into the strategy and my framework, I need to be completely transparent with you that this is not a promise that you will get rich in a few months, live your dream life, or achieve ridiculous specific results. This is not no get rich quick scheme. Okay? Why? Because becoming a consistently profitable trader, like anything worthwhile in life, requires effort and involves risk. Nothing easy in life will last. Take this as a principle. Okay? And if something comes easy, if something comes fast, it will leave even quicker. Okay? And the truth is, most people will watch this masterclass and do nothing with what they learn. Does that shock me? Absolutely not. It's just the nature of mankind. Okay? Majority of people are unserious. Majority of people are just watching this like it's Netflix. Majority of people are just here because, oh, my fellow peers are here or my fellow trading friends are here. Let me just go. Let me see what this is about. I probably know what he's going to talk about, but I don't need to learn anything. Even though I've never made a payout, even though I've never been funded, I know what this is about. No, you need to be here. You need to be here. But the truth is what? Most people will watch this and do nothing with what they learn. But the people who do take action and apply everything I'm about to share, they're the ones who will finally be one step closer to becoming confident in the markets and become consistently profitable. Why? Because this is a proven method. You go to my Discord, you look at the reviews tab, how many success stories. I have a challenge for you. Anybody in my Discord or anybody who will be involved in my Discord in the future, go to the reviews tab and scroll and scroll. I guarantee you, your finger will get tired. I guarantee you. That's how many reviews and lives we've changed. Okay? Your finger, you will feel, I guarantee you will feel muscles in your fingers that you did not know existed. You will feel muscles in your fingers that you did not know existed. This is a proven method, so pay attention. And most importantly, they are the people who will what? They are the people who will transform their own life and the lives of their loved ones around them. And I don't mean this to sound cliche and typical, like, oh my God, we're going to change our life. No. You take in this information, it causes some serious changes. If you are a serious individual. If you're not a serious individual, you are going to be the same guy. You are going to be exactly the same as the person who you were before you attended this webinar. This information will benefit you. This information will benefit you, whether you're already a trader or you want to learn this skill from scratch. So here's my goal for today. My goal is to show you how anyone, regardless of their past trading experience, can learn the skill of Forex trading and become a confident, consistent, and profitable trader. That is my objective for today. So my strategy works for the following type of people. Corporate employees tired of the 9-to-5 life, like my student Asim, who was working a corporate job. I'm going to get I'm going to speak a little bit about him later on. Parents wanting to spend more quality time with their family, like Sadia, one of my main students. Okay, she's been able to make over 50K in the trading markets, and she's a mother. Students looking for side income to help with school costs. Okay, we have many students who have taken on Yarimi University on the side of university, on the side of being in college, and they've been able to make it work for themselves. Trade workers, people who work manual labor. I believe we do have some construction workers. Yes, funded payouts. Okay. Full-time employees, beginner to intermediate traders who are looking to finally become profitable traders, and literally anybody who wants to build a money-generating skill that they will have for life. I always give this example. Trading is like fishing. Once you learn how to fish and you identify as a fisherman, okay, nobody can say you cannot catch fish. You might be able to say, oh, today wasn't my day. You might be able to say, today I've been sat at this river, at this lake, in this boat, on this ocean for hours, and I haven't been able to catch anything. Yes, you can say that. You might be able to say, oh, I thought I caught a fish, or I did catch a fish, but then it just ended up slipping away. Okay. Maybe the fish was too heavy and I didn't have the strength to really pull it out, and it managed somehow, some way it managed to get away. But nobody can discredit you for the fact that you know how to fish and you've acquired a skill. Trading is like fishing. Once you learn the skill, it never, ever leaves you. Let me just give you guys a few from thousands of examples of everyday people who come from a 9-to-5 background and who've made money from my mentorship. Take my student Asim, for example. He's made over $200,000 trading the markets. I've got an interview with him on YouTube, actually. You guys can go and watch that. He made over 200K. He comes from a corporate background, working a normal corporate job, and then he was able to leave his corporate job. He came from a struggling background, got fired from his job after going through my mentorship. He became a 200K funded trader. Not only that, after a short while, he got an additional 250K in prop firm funding. And the best part is he's been able to generate over 200K from the markets. Yes, that's 200K that he's made in profits. Okay, so this just shows you guys the possibilities of what you can actually achieve within the field of trading. So most people, they only talk about the things that they do. Oh, I'm going to be a profitable trader this year. And your friend is like, bro, you said that last year. So what's going on here? What's going on? Because you've been saying this for a very goddamn long time. Okay, this proves that what? Many people just talk. Thank you so much, brother. Many people just talk. They love to talk about the things they're going to do, and they love to have this idea of, oh, manifestation, right? Everybody wants to talk about manifestation. But I always say what? I always say that affirmation without the follow through, i.e., the work, is just hopeful thinking. It's just wishes with no real intent behind them, right? Imagine saying, oh, I want to become rich one day, and sitting down at home every single day expecting this revelation of riches to fall from the sky. It's just not going to happen. Whether you're a person of no faith, whether you're a person of faith, God did not say pray for money and money will fall from the sky. God said pray for money, yes, then go do the work so I can give you the money. Okay, stop being lazy. Some of you guys speak about the same things year in, year out, 2022, 2023, 2024, 2025, now 2026. Again, the same lies. Your brain's been so used to your nonsense that it knows you're about to lie to yourself again. Oh yeah, I'm about to lock in. 1 month into the gym, 2 months into the gym, 1 month into trading, 2 months into trading, 1 month into this side hustle, and you stop. Why? It's the same repetitive cycle over and over again. Furthermore, look at yourself right now and ask yourself, are you guilty of this? Because I guarantee most of you are. And these people, they never, ever put their words into action. Going back to what? Your brain knows you're a liar. Your brain knows. Your brain knows you are unserious about the words that leave your mouth. Okay? But you're different. Well, some of you, not all of you. You guys are different. I like to believe that. Anyway, okay? Because you've done something majority of people won't do. Majority of people see things like this online and think, oh, my days, scam. Oh, red flag, alert, this money making online, this probably doesn't work. So they never ever show up. They never ever show up. So their entire life is lived behind the curtain. There is no light in their life. Why? Because they doubt absolutely everything and anything. But you secured your seat. You came here and you showed up ready to learn. Something that only the top 1% would do. Okay? You put 99% people, 99% of people in a room, and you give them an opportunity. Majority of people will be looking to find faults in it before they learn to find hope in it. Okay, so big yourselves up, because this is something that majority of people just don't do. Majority of people won't come here to listen to a random guy that you guys probably don't know. Some of you may know me, but majority of you guys that don't know me, it's not common. So I commend you for attending this call. So before I fully begin, I want to highlight a few things before I fully begin. But let me quickly cover the mindset. The mindset that you should have going into this call, because I'm going to be covering a lot, guys. It's not going to be presented. I'm going to hop on the charts and it's going to be ridiculous, okay? I just want you to ask yourself, who are you? Person A. Person A is a person who does nothing and changes nothing. Person A is the person who will do nothing and change nothing. And the result is that your life will stay the same. Or are you person B? The person who does something today and makes a change. The person who takes out the notepad and pen and writes down all the information from today. Okay? If you guys walk away with anything today, I want you guys to walk away saying, you know what? Yarimi taught me so much today. Today, I've learned so much. Today, I didn't know anything about this topic, but I learned. Or today, I thought I knew this topic, but I learned. Or today, I knew a lot about this topic already, but I just gained this one extra perspective on it. Whether you're in any of these three categories, I will feel happy and sufficient in the delivery if I know you've been able to take at least one benefit, even though there are going to be multiple. Okay? So if you're person B, the person who wants to do something today and make a change, take notes. Be locked in. Put yourself in an environment where you're able to actually grasp this information, because the result of that later on could be seeing success and actually changing your life, guys. And 90% of you guys are person B. I know it for sure, because you're already here. You've done the major step. Okay? The 10% of you guys are just here for entertainment purposes, like I said. And that's okay. I'm fine with that. That's going to come with anything. You can never get something with 100% purity. Sometimes impurities come along the way. Because here's what you're probably experiencing right now. You're either a student or someone stuck working a traditional 9-to-5 job. You want to use trading as your vehicle to achieve your dream life, and you want total time location and financial freedom for yourselves and your loved ones. Okay, this is something that everybody strives for. Everybody strives for this. Until this day, I stand before you, being someone who, in the most humble way, I've made multiple millions in my life. Okay, the thing I value the most right now, is not just the financial freedom, but the time freedom. The time freedom to be able to do whatever I want, whenever I want. I start work whenever I want. You see, this is the thing I value the most. And I know you guys have the same goal. I know it, because you wouldn't be here if you was absolutely, well off. You would not be here. Okay? But you're here. And this is what you want. So pay attention, because I've gone through the same process. And the goals you have now, I've probably hit them. Okay? In the most humble way, guys. I'm nobody. I don't want you guys to think I'm just boasting. I'm here to inspire you. I see you guys as my brothers. I see you guys as my sisters. Anything I say today that speaks about money or achievements, please don't take it as me flexing or me just please, guys. We live in an industry where if you haven't got results, people just won't listen to you. So unfortunately, for the people here that don't know me, I have to say these things. I have to show these things. It's just, I'm fully transparent. Those of you guys who are in my community, especially in TPC, you guys know whenever I take a loss, I show you. Whenever I take a win, I show you. Whenever it's a good day, I show you. Whenever it's a no trading day, I like to show everything. I'm transparent, and this is how I will always be. Okay? So whenever I'm mentioning monetary examples, please just understand it comes from a good place, just to inspire you and show you guys that I'm no different to you, and you can genuinely make this happen for yourself. Whether it's trading, whether it's business, whatever field you go into, just know that you are destined for greatness. And if I can achieve something like this just from pure hard work, you can do the same thing. Okay? So understand, remember, I'm your brother and you are my sister. I'm your brother and you are my brother. All right? Family ties. Let's go. So speaking of my brothers and sisters, that means I totally understand your situation, because I was once upon a time in a situation that you're in or similar. Okay? I was exactly where you are today, just a few years ago. Maybe even at a worse stage. Maybe you were worse, maybe I was worse. Hey, but we're not here to compare struggles, but a struggle is a struggle, right? Now, the reason as to why you haven't achieved profitability yet, the reason why you're not profitable, is not because of you. It's because nobody has ever given you a clear roadmap that can get you from where you are today to becoming a consistently profitable trader. And I say this with what do they say? They say respectfully, right? Respectfully is a term used when you want to be disrespectful. So I'm going to use the term respectfully. You guys that are unprofitable deserve it. Majority of you. Yes, I said majority. Majority of you who are unprofitable, you deserve it. Why do you deserve it? You have no clear roadmap because you're following 50 mentors. You're following 25 mentors, 10. You're following so many different strategies in hopes to make a juice bar. You're trying to make the absolute cocktail. You're trying to make a mojito out of all of these mentor strategies. Okay? You follow one mentor 1 week, your chart colors change to their chart colors. You follow another mentor the other week, your chart colors change to his chart colors. You follow another mentor, you watch one YouTube video the other week, all of a sudden your tools on TradingView are exactly like theirs. The text, the format, where you put the text, and the color of the trend line, and this, and the candle, everything has changed. These things play a huge part. You're not unprofitable because of, a lack of information. You're unprofitable because of a roadmap. A roadmap. Imagine being on a straight road, and this road has so many different exits. Or you're on a road, just like this picture here, and the road appears to have no exit. It's just a roundabout that brings you back the same way. Just a roundabout that brings you back the same way. This is exactly your path because you follow too many traders. You think excessive consumption of trading content is good for you. It's not. It's not good for you. If it's from one person, yes, it's good. If it's from 1 million people, 2, 3, 4, 5 people, it's not good. So sometimes the issue is a roadmap. And that's exactly why 90%, 95% of traders stay stuck. They stay stuck on a losing hamster wheel for a very, very, very long time, and they can't identify where they're going wrong. Okay? They feel stuck, anxious, and lost because they're moving without direction. They're just moving. They're just moving. Imagine you put a stairmaster. Okay? You put a stairmaster in an apartment block. Are you going to be going up in levels or down in levels? You're going to be stuck in the same place. Imagine you put a treadmill on the road. Are you going to be moving forward? No. You look like you're doing the work to get somewhere, but you're getting nowhere. Are you losing weight? Yes. Are you burning calories? Yes. But you're not going nowhere. So some of you guys are, you have this false perception of work. You think work is going to get you there. Work alone will not get you there. Work, a proven edge, a proven system, and a roadmap, that is what will allow you to get to your destination with the correct mindset. But when you have the correct path laid out for you with a strong why behind it, you start building on actual skill set, not built on hope. Okay, you don't build on hope. And they say that what? 80% of any change is knowing why. Only 20% is knowing how. You're so focused on the logistics of how you're going to achieve success when your reason why is not big enough. Now, let me ask you, what is your why? Is it to be there for your kids instead of dropping them off at daycare every single morning? Is it to help your parents retire and never work a 9 to 5 again? Is it to look in the mirror and recognize yourself again? Because a lot of people lose track along the way. You forget yourselves on your path, on your pursuit to success. You can forget who you really are. Okay? You can forget who you really are. So is your purpose to look in the mirror and recognize yourself again, not the exhausted stranger trading dreams for a paycheck? Is it to finally break the generational curse of struggle that your family has been carrying? What is it? Ask yourself. This is rhetorical. Ask yourself. Quick note before we fully start. Walking into this masterclass today, I want to remind you guys of something I briefly touched on earlier. I want you guys to drop all the hesitations that you have. Maybe you're wondering if money, age, or having a pre-existed knowledge about trading will stop you from achieving success. And the answer is it won't. Because what I'm about to show you works no matter where you're starting from. No matter where you're starting from. So let's begin now. You guys ready? Let's go. Let me get the charts up, please, Alex. Okay. Charts ready? Amazing. So, first and foremost, guys, for those of you guys who have never, ever traded before, what you need to understand is that very, very, very briefly, the market moves in waves. So here, what looks like random movement on the chart, what looks like random things on the chart, they're not random things. Very, very, very quickly. Over here on the top left-hand corner, this is called Euro USD. Okay, this is tradingview.com. Euro USD basically means I'm looking at the euro versus the US dollar. Okay, versus the US dollar. On the side here, these are all tools I can use. This is a rectangle. Okay, I draw a rectangle. This is a trend line tool. Okay, I'll draw a trend line tool. And throughout this webinar, you are going to see me use the different tools, and we're going to be progressing together and evolving together. Okay, so now what does this mean? What does this mean? This means that whenever you see movement in price, fluctuation in price, this is an accurate representation of what? The current price for the euro versus the US dollar. Meaning what? For €1, I will get this much US dollar. On the bottom, what can you see? What can you see right here at the bottom? You can see dates. So over here, these are the dates that price is representing. And on the right-hand side, you can see this is price. So right now, what can we see? There's a countdown timer, meaning what? Meaning this candle, these are called candles. This candle will close in 2 hours. Okay? The body of the candle is called the candle. Okay? And the bottom of it, this thin line, is called a wick. Very, very, very similar to an actual candle. When it's your birthday, you light the candle and you blow it, right? If you light a candle and you wait for the candle wax to burn, what happens? When the candle wax burns, the wick becomes longer. The wick becomes longer. So in trading terms, this signifies weakness or strength. The more wick there is in a candle, the weaker that candle is. The more body there is, i.e. wax, the more body there is in a candle, the stronger that candle is, and the better indication, along with all other confluences, of course, the better indication that price will move in a certain direction. Okay? So now, how does price move? As you can see here, if you just take a look at this very, very, very briefly, if I get my highlighter tool and I just hover over this, just for beginners very quickly, you can see the market moves in waves, right? You can say, okay, the market is moving down, market is moving up, market is moving down, market is moving up, market is moving down, market is now moving up. Okay, so this is a very, very simple pattern that every single human being can spot. Okay, it's inevitable. Every single human being can spot this. It's because the market moves in waves, and I'm going to get to those waves very, very, very shortly. So here, this countdown represents what? This countdown represents something called a time frame. This right here, it says 4H. This means this is the 4-hourly time frame. So this means that what? Each candle now represents 4 hours. So this candle represents 4 hours of price movement. This candle represents 4 hours of price movement. This candle represents 4 hours of price movement. This 4 hours, 4 hours, 4 hours, 4 hours. Now this one, it represents 4 hours of price movement, but 4 hours is not up yet. 4 hours hasn't come to an end. There's how long left? 2 hours and 17 minutes for this candle to close the same way these candles have closed. It's done. These 4 hours are done. This 4 hours complete. This 4 hours complete. But this one is incomplete. Why? Because it hasn't yet closed. Perfect. So now, when we talk about the market moving in waves, remember how we spoke about the market moving in waves when we spoke about this? When we spoke about how the market moves as such. Boom, 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 lower high. Okay. This is called market structure. So this is called market structure. And just very, very, very quickly, I want to highlight the basics of market structure before we get into advanced terms and we gradually grow. So here, this is called market structure. The same way we just saw the live example on the charts is the same way price will usually present itself. This is called market structure. Market structure is where you are able to see who is in control, because this market is made up of buyers and sellers. Imagine a tug of war between buyers and sellers. This is literally what's taking place in the market every single day. So when we say it's a multi-trillion-dollar daily market, I believe it's at a $7 trillion daily market right now, maybe even more. This is what we mean. We mean there are multiple transactions, multiple orders being placed by both buyers and sellers in order to make the market move. So market structure allows you to see who's in control via what? Trend. Via trend. So this is how the market was moving just earlier on, as we've highlighted. Okay. And this is something within the subject of market structure. So this is now called a what? This is now called a downtrend. This is now called a downtrend. And this is a what? High. This is a low. This is a high. What kind of high? It's a lower high because this high is lower than this high. This is a low. Why? Because this low is lower than the previous low. Okay, great stuff. Okay, let's mark that out right there. Let's mark that out. Perfect. Okay, let's mark out the lows that have been breached. The first time a low is breached, you can see this high led to this low that broke below this low right here. The first time this happens, we call this a change of character. This is called your change of character. Change of character right there. Okay. The second time it happens, it's called a A break of structure. BOS. Okay? The second time it happens, it's called a break of structure. The first means what? The first change of character. It's in the name. It's in the name. The first means, okay, price was, okay, previously, let's say, bullish. Bullish means whenever price was going up. Whenever price was going up. Okay? Whenever price was bullish, okay? Whenever price was bullish, or whenever price is bullish, it makes something called higher highs and higher lows. This is a low, this is a high, this is a low, this is a higher high because this high is higher than this high. This is a higher low because this low is higher than this low. This is a higher high because this high is higher than this high. So now all we want to do whenever we're looking for a bearish setup, bearish is opposite to bullish. Bullish comes from what? Whenever the animal, the bull, would attack, he would strike with his horns upwards. Whenever the animal, a bear, attacks, he strikes with his claws downwards. So bullish represents price going up, bearish represents price going down. So here, whenever you see what? Whenever you see a high that leads to a low that takes out a previous low from a previous trend, meaning what? Price here was in an uptrend because price was bullish. When we get a breach of this level, this is, okay, this is what? This is your change of character right here. This is your change of character. Why? This is a low that led to a high. This is a high that led to this low that broke below this low. That broke below the bullish low, the protected bullish low. Because this is seen as a protected low, right? In the laws of market structure. So the moment this is breached, we call it a change of character. Why is it a change of character? Simple. Ask yourself, okay, how is price behaving here? Price was making a low. Price was making a high. Price was making a low. Price was making a higher high. Price was making a higher low. Price was making a higher high. Price made a high. It's supposed to make a higher low. Why did it not make a higher low? It breached this low. So now we can say, price is changing in its character. The behavior is changing. It's no longer the same. So we mark this out, not to say, oh, yes, we're entering a trade, we're buying or we're selling. No, we mark this out as an observation. We mark this out and say, let me mark you out. You're not behaving usually. You're behaving a bit different. And then when you get the break of structure is where now you have this high that's led to this low. You have this high that's led to this low that's broken below this low. Now you mark this out as a break of structure. Okay? And now whenever price does that again and again and again, like in this scenario here, price broke structure again to the downside. Price broke structure again to the downside. You can say, okay, this is now an established downtrend. The same way this was an uptrend, this is now a downtrend. So I'm pretty sure you guys have heard the terminology buy low, sell high. How do you guys know when to sell high or buy low? Okay? How? Simple. How I know when to buy low and sell high is I look for my confirmations. Whenever price is in a discounted region, discounted meaning what? I ask myself simply, is price within a cheap region right now? Is price cheap? If it's cheap, I want to buy. Is price expensive? If it's expensive, I want to sell. And the beauty about Forex trading is that you can make money whilst price is going up and whilst price is going down. So the change of character and the break of structure aligned with multiple other different confluences. The word confluences, you're going to hear a lot in trading. Okay? And it simply means your reasonings for you to believe this. Within trading, you can never say, oh, I just think this is going to happen. Based on what? Based on what? Your analysis has to have confluence behind it. It has to be backed by confluence. Reasonings, okay? Grounds. You need to have grounds for you to have this belief. Why do you believe this will happen? Whenever you hear someone say, oh, I want to buy, Ask them, what are your confluences to buy? Whenever you hear someone say, I'm selling, what are your confluences to sell? Okay? So this is in absolute basic terms. So this here will be a downtrend. This right here will be a up. Perfect. So I've been told to type with bigger letters. Perfect. This right here is an uptrend. This right here is a downtrend. Okay? Amazing. Perfect. Now let's dive in. 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 Okay. When it comes to the topic of market structure, when it comes to the subject of market structure, you have to understand there is something called external and there is something called internal market structure. Here we spoke about time frames. Anything on the daily, 4-hourly, for me is external. External. The hourly is intermediate. And anything on a 15-minute and the 5-minute and the 3-minute is and the 1-minute is internal. This is how I trade. Okay? This is how I trade. So when it comes to external market structure will tell you where price wants to go long term. So let's say, for example, here we have this box, and let's say this box represents external market structure. Let's make this bigger for you guys and place it at the top. Okay, external market structure. Okay, great stuff. So here within external market structure, I'll move this to the left. Within external market structure, let's say, for instance, price is bullish. If price is bullish, meaning what? It's making higher highs and higher lows, higher highs and higher lows. Okay. In this scenario here, externally, I can say I am bullish. I want to buy long term. Does that now mean I can't capitalize on short term moves? No. Okay. I can absolutely capitalize on short term moves. And when we say short term, we don't mean, oh, only for a few seconds. No. We mean on a different type of perspective, because you see, there are position traders who hold trades for months, years. There are swing traders who hold trades for weeks. There are day traders who hold trades for a day or the duration of the day. Okay? There are intraday traders and intra-session traders who hold trades for the volatility that the session offers. So when we say this is external market structure, we mean anything that's referred to the higher time frame. External is the bigger picture. Internal is what makes the bigger picture. Okay? A combination of internal buyers and sellers will overall affect the external. In this scenario here, this is external. When we have external and we understand the basics of what? We understand the basics of how market structure operates or how trends operate, i.e., this is a low that led to a high. This is a low that led to a high. You see, when this low led to this high, price had to come back. This is called a retracement. Price had to come back. But when we speak about markings, what do we have? This is a low, led to this high. You mark this out as you change the character, right? Why? Because let's say, for example, price was previously bearish. Price came from a downtrend. Now it's taken out, for example, the first. It's taken out the previous lower high from a downtrend. Let's say, for instance, in this case, price came from here. Okay. And now we can say, okay, this is a low that led to this high. Price change character. Okay. Price change character. Why? Because it took out structure to the left, meaning it took out a high that led to a low that broke below this low. And now that you have a low that's led to a high that broke above this high, This is your change of character. Why? Because price is behaving differently. And now when you have this low that leads to this high, this is your break of structure. Why? Because price is behaving differently. And now you get a confirmation of what? One simple thing. Buyers being in control. Buyers being in control. Simple as that. Now that you know this, what you have is what? Externally, you can say, okay, every time price pushes up, having confirmed that buyers are in control, price retraces. What do we speak about discount? Price has to come back to a cheap price to offer buying opportunities to then continue, form a continuation. If this is external market structure now, can we buy from here? No, because that means we're buying at the top. We're not buying low, selling high. We're buying high, selling low. That makes no sense. So we have to buy low. So if we can't buy high, what does that mean we have to do? That means we have to sell high. By selling high, we understand that external market structure offers you a range. And this is called a swing low. And this is called a swing high. And this is called the transactional range or dealing range, whatever terminology you want to use. This is where I'm looking to deal. I'm looking to get involved somewhere here. I'm not looking to sell right here. I'm looking to sell where? If this is my high of the dealing range, okay, and this is the low of the dealing range, I want to sell at anything above 50% of my dealing range. If this is a box right here, where's the midpoint? The midpoint is here. So I want to sell anywhere above my midpoint. Okay? I want to sell anywhere above and I want to buy anywhere below. Okay? After I get confirmation that we're going to speak about as we advance in the school. Okay? So in this scenario now, I understand, okay, if this is external market structure, what's internal market structure going to be offering? Let's take a look. Internal market structure is going to be offering what? Internal MS market structure. Okay? Internal market structure is going to be offering what? Selling opportunities. So let's say, for example, this is on the H4. For example, H4 time frame. Okay? And let's say, for example, this is on the 1 minute, or let's say 15, or the 5, or the 3, or the 1 minute time frame. Okay? Then I would know that, okay, because the trend is bullish, price needs to come back to a what? Price needs to come back to a discount. For price to come back to a discount, it must sell off temporarily to confirm a retracement. To confirm a what? A retracement. So here, this is where I look for what? The same thing. The same thing. And it's not just, change of character and break of structure, because if trading was as easy as change of character and break of structure, every single person will become profitable, but it's not. It's not. So listen close and pay attention. Check this. So now, when we have this, okay, we have a high that's been made. Whenever price breaks structure to the upside, okay, and the momentum is dying out. When I say momentum, what do I mean? Remember we spoke about candles, bodies, and wicks. Okay? Whenever you have more wicks than body at a high, you know that you can't sell there, right? So what you know that you can't buy there, sorry. Okay, whenever you see more wicks means wicks at a high means momentum is dying down. If you see wicks to the upside of a candle, okay, it means momentum, bullish momentum in this scenario is dying down. So this is an indication that what? You are going to get lower time frame confirmations. Lower time frame. The hourly, 4 hourly, daily, weekly time frame, these are called high time frame. 15, 5, 3, 1 minute. These are called lower time frame. So here you're going to get lower time frame confirmations to ride price to the downside and to sell and make money on the way down. You make money on the way down. Yes. Okay. So what do you do here? The same way you have structure externally is the same way you have structure internally. So in a scenario like this, what would you have? You will simply have something like this. Okay. And I'm going to speak about the advanced stuff later on, like inducements, liquidity sweeps. But just for simplicity, okay, here it will look something like this. Let's say, for example, now price wants to pull back in. It doesn't retrace all the way past the midpoint, because if it goes below the midpoint, that means it's in favor to do what? It's in favor to buy to the upside again. But it doesn't do that. It doesn't do that. Here, what will it do? It will create just a minor low, a very minor, insignificant low. Okay, why is it insignificant? Because it's not in a discounted range. A discounted range is anything below the midpoint to buy, and anything above the midpoint to sell is called a premium, not a discount. Okay, so here it will create a minor low. This minor low is sometimes just created to have structure to take out later. It's created as an excuse. Okay, so this minor low will be created, and then this high will be breached. Now, this is where I want you guys to think, okay, top percent of traders. You see, the majority of traders will look at this now and say, oh, this is a break of structure. This is a break of structure. Why is this a break of structure? Because price created a low that led to a high that broke above this high. Now, this is the new low that led to a high that broke above this high. You want to build a series of red flags in trading. One of the red flags is whenever you see a low that leads to a high that's not within a discounted enough region, it's usually a red flag. And I say usually because there's only one exception, and that's relevant inducements that we're going to get into later. Don't worry if that word doesn't make sense to you. We're going to get into that later. Okay, so here, this is a low that's led to a high. We now know this is an excuse. Why? Because we know price just created an external low that led to an external high that took out an external high. So price is exhausted, man. It needs to come back down. Think of this. Whenever price creates a low, whenever price has a low that creates a high that breaks above a structural level like this externally, price is similar to a vehicle that has started its road trip, that has been driving for kilometers and 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 kilometers before it has run out of fuel. So what must price now do? Price must come back down to refuel below the midpoint before forming a continuation to the upside again. Okay? So now, because we know price is exhausted, how? Because of the wicks in the candle. Okay? And also we know what? We get multiple other red flags. Like, okay, people thinking this is a break of structure. We now know this low here is just a temporary decoy to make us think, oh, price is going to push up from here. No. This low leads to a temporary high that creates what? Not a break of structure, no. This is called an inducement. We mark it out as IDM. It leads to an inducement. An inducement is what? Something that appears to be true, but really and truly it is false. A move that entices you. It entices you. Okay? What is this enticing? This is enticing buyers who think this is a low that's led to a high. So whenever price comes back into a discount, a low, they want to buy from here, expecting what? Expecting a continuation. What happens instead? Price violates their zone. And when it violates their zone, what happens? What does it do for us? It confirms, oh, price is behaving differently. Why? This was a low that led to a high. If price was still bullish, price wouldn't breach this low. But because it's breached this low, there's a change of behavior. There's a change of character. Okay, good. Let's mark this out. Now what happens? Price pulls back in. This is not enough of a reason for you to take a sell, but internally you can find reasonings. You don't want to ever just take a sell from here and say, oh, when price goes down, I'm making profit. No. The same structure. Okay? Now, this is a high that's led to a low that's changed character. This is a high that's led to a low. That's done what? That's done what? It's broken structure now. When it moves in the same direction twice and it breaches a structural level twice, that is your break of structure. So here now, how can you capitalize? I'll be waiting for a pullback to enter a sell from a premium level like this. Why is it premium? Let's revisit. Why is it premium? This is called a what? Okay, let's delete this and then let's delete this now. This is called a what? This is a swing high internally. This is a swing low. This is our range, right? Our transactional range, our dealing range. Where's the midpoint? The midpoint is here. What did we say? Whenever we look to sell, we're looking for what? Movement, anything above, anywhere above the midpoint. And typically here, you'll find something called a supply zone. A supply zone. And the supply zone is found within premium levels. And the candlestick pattern you'll usually see is something called a bearish engulfing. The candle will look like this. It'll be one small candle followed by a candle that engulfs it. It will look like this. Okay? And then the candle will have a wick to the upside, like so. Okay? Maybe a wick to the downside too. And how we mark it out is we draw a box from wick to wick of the candle prior to the engulfing candle, and we extend our box to the right. Now, whenever price pulls back into a region like this, we sell from it. Okay? So, just taking a look at this again. So now that we have this, now that we understand, okay, price is within a premium level. Price is within what? A premium level. This is where I like to use my fib tool. Okay? It's called the Fibonacci retracement tool. You draw it from the high, the swing high, to the swing low. You're going to see a bunch of percentages. And this was created by a man called Leonardo Fibonacci. It's a bunch of numbers, percentages in the form of a sequence that show the ratios and percentages that price is most likely going to retrace from. You have 50%, 61.8, 78.6. I personally will never trade from the 50% level because I believe it's an area where majority of retail traders enter. Okay. I usually like to get involved around 60%, 78.6%, anywhere between those. Okay. And my fib settings are just like this. You can just copy this. My fib settings is exactly like this. Okay. Exactly the same. Okay. So these percentages help you identify as a beginner where your premium and discounted levels are. So now that we understand this, we know, okay, lovely, price of broken structure, there can be some confirmation to take a sell from here. Take a sell from here and ride price to the downside. Now, whenever you enter a position like a sell, you would short the market. And whenever you buy, you long the market. So here you use your short position tool on TradingView just to view it. This doesn't mean you've entered the trade. Okay, unless you're trading with a broker on TradingView. So here, this means what? You're just observing. You're monitoring. You do your analysis on TradingView and you execute on something called MetaTrader 4 or MetaTrader 5, or if you trade on TradeLocker or CTrader, whatever platforms you trade on. I personally trade on MetaTrader 4. I'm not a fan of MetaTrader 5. I like MetaTrader 4. Okay? Here, you will short the market. This is your stop loss above. This is your stop loss. Imagine your stop loss as a security guard. A security guard guarding your home from thieves and people who want to steal from you. And the very bottom of the line is called your take profit. The very bottom of the box is called your take profit. And the middle line here between these two colors is your entry price. And you will find here 1.16526 is my entry price if I was to sell from here. 1.16543 is my stop loss price. Meaning what? If price goes above this level and hits my stop loss price, I don't lose any more than I was intending to risk. So people say, oh, trading is risky. Yes, it's risky if you're risking your full amount. I never risk any more than 1% of my total capital. The only time I do is if I've made a very, very great amount of profit for the day already. But if I'm just getting started for the day, I never risk any more than 1% of my total capital per trade. So if I take a loss, guess what? 99% of my account is still alive. Why? Because I have a stop loss in place that doesn't allow me to lose more than the amount I put in. And you factor this in by using something called a lot size. A lot size is where you are able to see how much am I willing to risk on this trade. If the trade hits my take profit, how much will I win? If the trade hits my stop loss, how much will I lose? Your take profit is here, this price, 1.16439. Your stop loss is this price here, and your entry price is here. And that's simply how the short position tool and the long position tool work. It's exactly the same. So in this scenario now, you now know the basics of what? Okay, price in the premium, you sell. Price in the discount, you buy. But now let's get into the what? Let's get into the nitty gritty. When in terms of market structure, you know who's in control by what? Understanding one thing and one thing only: the reveal of market intent. You see, when the market creates lows and highs and lows, it's not doing this for no reason. It's doing this so that you can pay attention to who is in control. When the market wants to show you who's in control, it will print itself and it will reveal itself intentionally. Whenever the market wants to reveal who's in control, what will it do? It will print huge moves to the downside with intent. Price comes down. You know, people say, oh my days, the market is bleeding. This is what it means. Yes, the market is showing intent. That's a crypto term. We don't use that here. But here we say what? Price is revealing its intent. Price is revealing its intent. Price is revealing its intent. It comes down with huge momentum. Okay? Whereas, now we're going to get technical. This is where I love it. Okay? And now, whenever price is retracing, what you'll notice in the behavioral patterns is what? What you will notice is, if we're saying this is our reveal of market intent, that means sellers are in control. And if sellers are in control, that means this is our range high to low. And that means the move to the upside will be a temporary move. So now what do we have? We have a retracement. Price moves slow in the period of a retracement. And price moves fast in the period of what? Direction. And the direction of who's in control. And what price will do is it will close the gaps. It goes up, comes back, close the gaps. Goes up, comes back, close the gaps. Goes up, comes back, close the gaps. Comes up, goes back, closes the gap. The gap of what? Imbalances. You see, whenever there is a intentional, institutional intent behind price movement, and why do we emphasize on institutional intent? You see, we emphasize on institutional intent because these are the big players, the hedge funds, the financial corporations, institutions, the banks who have large sums of money to move price intentionally, significantly. They leave footprints. And one way they leave footprints is by leaving behind imbalances. Now, the clue is in the word. If there is an imbalance in something, that means what? There was erratic movement, or there was unusual movement. In trading terms, there was what? A reveal of market intent to show institutional moves. This is an institutionally funded move right here. The high that led to the low with this much volume. So whenever there is an institutionally funded move, because understand this, my $100,000, million, $20,000, $5, $10, your $10,000, $500, $100,000 will not move the market. We don't have the capacity to move the market. Collectively, as a bunch of retail traders, maybe we can cause some moves, no doubt. But intentional moves, we can't do that. You see? So, whenever institutions print their intentions, what are they doing? They are printing and funding this move with billions, trillions of dollars. Okay? It's a $7 trillion daily market. So whenever they are printing, okay, and funding these moves, what happens is there will always be an imbalance in price because price will move too fast. Okay? Price will move too fast because they're injecting too many funds here. And imagine they have a certain intention to inject X amount. They can't do all of that in one go because it will cause ridiculous moves in the market, a mass amount of slippage. Okay? So in this scenario here, they have to do it in small increments. But because the amount that they've pumped into this move here is already a significant amount, is going to leave behind something called an imbalance. So price must go back to this imbalance to rebalance, which now aids what? Our understanding that whenever price is in a retracement period, not in the what? In the intentional period, it has to close imbalances. Okay? Imbalances. Why? Sorry, there will be no imbalances. It closes the gaps. It closes the gaps. That's what I was supposed to say, my bad. It closes the gaps. Why? Because the intentional imbalances are found in the what? In the move where institutional funding was pumped, which is right here, the sell, the high that led to the low. So now whenever price retraces, why does it move slow? Because there is no institutional intent in the retracement. Okay? Their intention institutionally is, okay, let's push price back here. Okay? Let's try our best to print scenarios that invite retail back in these moves to push price here so we can now pump more money here to then take price down. And what happens to retail? Stop losses that are here, here, here. Traders that are buying here and here and here. All of that is taken out from the second institutional batch of funding. So in this scenario, what do we understand? In this scenario, we understand that price moves fast in the direction of institutional intent and price moves slow in the retracement period, which is why we have something called phase 1, which is the reveal of market intent. Phase 2, which is the retracement period, and phase 3 is when the market repeats itself and shows institutional intent once again. You see? So in this scenario now, we can establish who is the party that is in control, buyers or sellers. Clearly, sellers. Why? Not just because of market structure, but take a look at the intent, the volume behind a series of candles here. Okay? Price moves slow in the opposite direction. And now here, price confirms directional bias. Price confirms who is in control. So now, going back to the question, we said what? This is external structure. This is internal structure, right? When it comes to internal and external, we have this as our internal. We can say, okay, this was a low that led to a high. We don't see this as a break of structure. We see it as an inducement. This is a high that led to a low. Okay, great stuff. This is a change of character. Up here, we can find an entry. The safer entry is where? After price has broken structure. That's where your confirmation entry usually is. And then what do you find here? You find a level of supply. Remember the engulfing candle that we spoke about? After price has broken a structural level, you find a level of supply that lies within a level like this. Okay? That lies within a level like this. And now you wait for price to do what? Slowly, slowly, slowly retrace again. Up until that zone. Boom. Then it comes back down again. What do you find in common? What can you see? Intentional move to the downside. Intentional move to the downside. Slow retracement upside. Intentional move to the downside. Slow retracement to the upside. Intentional move to the downside. What do you believe is going to happen next? slow retracement to the upside. So how do you capitalize on this? The ideal situation internally is to not capitalize on internal retracements. The ideal situation, internal retracements. You want to capitalize on internal moves to fulfill external levels. Remember, don't forget the purpose. Our left side is what? Our external, we said. If this is the H4 time frame or the daily, so on and so, whatever the case may be. Internally, we want to be able to sell up until where? Up until price reaches where? These levels here. Our discounted level. And now we can do what? We can say, okay, we've capitalized on these moves to the downside. Okay? We've capitalized on this move to the downside. Yes, we capitalize on this move, this move, this move. Now, because this is external structure, these internal movements won't happen like, you're not going to get 3 internal movements like this every single day. This might be Monday. This might be Wednesday. This might be Friday. This might be Monday. You see? So whenever you have an external level that you know takes precedence over internal, why? Because a higher time frame takes precedence over internal. Okay? Whenever you have that, you understand, okay, it's a matter of time before price is magnetized towards these discounted levels here. But I know this is a low that led to a high, and eventually price needs to come back down and refuel at the service station. Why? Because price is exhausted. So I need to wait for this to happen in order to do what? To take price back to where? Back to the upside. Okay? Perfect. So in this scenario here, what we're going to be doing, we are going to be looking to be externally bullish again from here. Okay? You guys got me? Perfect. Alex, how far are we into this call? How long has it been, brother? 1 hour, 20 minutes. Beautiful, beautiful, amazing. Okay. So now, once price has fulfilled the external level, the level we were waiting for. Why? Who remembers why? Because we said, if we just strip this away very, very quickly, because we said that if this was our overall swing low and this was our overall swing high, the midpoint was where? At 50%. How do you mark it out? Okay, let's go. Fibonacci from the low to the high. Whenever price is bullish, you want 100% to be at the bottom, and you want the 0% to be at the top of the swing high. Okay, so anything below 50%. So 50% will be where? Right here. So let me just get my line, mark out 50%. Okay, now I know anything below 50%. When I get confirmation below these levels, and I said to you, I like to look for confirmation around 61% and a 78.6%, I can now look to be what? Pro-trend again. I can look to be pro-trend again. Beautiful. So in this scenario here, what do I look for now? I can look for confirmation. Whenever I get a mitigation. Whenever price fulfills your level, it's called a mitigation. Okay? Whenever price comes into your level, it's called a mitigation. So now when it comes to mitigations, it's very, very, very important you understand the mechanics behind it. Price can't just mitigate your zone at a random time and give you an opportunity straight away. Okay? Opportunities to enter a trade are only found in something called your kill zone. Your what? Your kill zone. Our kill zone is from 8 a.m. to 11 a.m. London time for London session, and 2 p.m. London time to 5 p.m. London time for our New York session. I don't trade any other times. My trades have to be. Oh, does it have to? Yes, it has to be in these times. So if an opportunity presents itself before my London session, I see it as a red flag. If an opportunity presents itself before my New York session, I see it as a red flag. If an opportunity presents itself after my London session, I see it as a red flag. If an opportunity presents itself after my New York session, I see it as a red flag. So let's say, hypothetically speaking, at the bottom here, you can see the timings. Ignore these times. Let's just say now I place this vertical line tool right here. This blue line. Let's say this blue line represents 8 a.m. London time, okay? On the bottom here, I've written 8 a.m. If this blue line here, let me make it a bit more thick for you guys. If this blue line represents 8 a.m. London time, okay? And price mitigates my zone. I receive a mitigation. And now price moves off. Okay? Comes back down. Moves off again. Comes back down. I can look to enter this trade. Why? Because whenever price mitigates your zone once, pushes away, that's a sign that you should say, okay, I'm interested. Whenever price comes back in, you can't just enter from here. Why? Because it hasn't taken out structure to the left. Remember we spoke about change of character and break of structure? You can't just enter from here straight away. There's another type of entry I'm going to get to after that you could have done. But you can't just enter from here straight away. Why? Because there's no structure formed. Okay, now price is tapped into to your zone. This zone here, this low that created this high. It's moved off. Price has come back into a non-existent zone because it's not valid yet. And then it's moved off again. Okay. Now it's created structure. Okay, it's taken out this high. And we call this a two-leg confirmation. One leg to the downside, pushes off. So it comes in, one leg, pushes off, two leg, pushes off. Let's draw that again. One leg, it comes into your zone, pushes off. Two leg comes into your zone, breaks a structural level. Okay? This is now your change of character, and now you're left with a zone over here. You're left with a zone like this. Okay, you're left with a zone like this. And you can now do what? Wait for price to mitigate the zone, push off from the zone. It's not this simple because there is a lot of mechanics that goes into it. I can't get into all of the details. It's going to take so many hours to do. Okay, but these are the basic mechanics. So in this scenario here now, remember I told you guys you could have took an opportunity before to find a trade from here. This is when you want to wait for confirmation in a zone. When you want to wait for confirmation from a zone, you wait for something called a two-leg protocol. Price taps in once, pushes off. Price makes another leg, pushes off, comes back in. So leg one, leg two, comes back in. Pushes off. This has to happen, meaning what? Whenever a trade takes place, it has to happen within your kill zone. So this next vertical line tool will represent 11 a.m. 11 a.m. So this is 8 a.m. This is 11 a.m. If this mitigation, meaning what? We're only interested in what here? This tap right here, because this is our entry. We are going to enter from here. If we have a mitigation and we just shift this 11 a.m. to like here, is this now a valid trade? No. Most likely what will happen? Most likely price will come in, give a false reaction, and it won't create a new high. And then it will invalidate the entire zone and mitigate a zone deeper, probably down here. Why? One reason and one reason only, because it is simply outside of your kill zone. And this temporary move to the upside is called your early buyer's trap. Okay? That one simple reason. Okay? It creates a fake temporary move to the upside. And then it takes you out of the trade, hits your stop loss. Because remember, what did we say? Imagine you're now entering, you're longing now. You're entering a buy from here, right? Okay? And your stop loss goes where? Below the low. And you're looking to target where? Let's say a high from this level here. And I'll get to TP targets, take profit targets. Okay? Here, what's important is something called what? Your risk to reward ratio. whatever you're risking, you want to make back at least 3. That's how I trade. If I'm risking 1K, I want to make back at least 3K. If I'm risking 5K, I want to make back at least 15K. You see? In accordance to the level of capital that you have. Okay, and if you don't have capital, you can always take the funded route and trade with prop firms. I recommend Funded Next. They are one of the best prop firms right now. I think that they're actually top 2 right now. Use my code Yarimi and you can get a nice cheeky 120% off with them. So I like to make at least 3 back of whatever I risk. So here, your risk to reward, it says it here. Risk to reward ratio. So whatever your risk, your reward is, it will say it here. Meaning what? If your risk is 1, you'll make back 5. Okay? If my risk is 1K, here it says 5.6, it means I'm going to make back 5.6 more. If I adjust it now, 5. If I adjust it more, 4. If I adjust it more, 3, 2, 1. Some people trade 1-to-1s, 1-to-2s. It's up to them. I don't recommend it personally because that's not my strategy. My strategy is risk to reward over win rate. Okay? I made $197,000 in 11 trading days with a 30% win rate. That's how effective the strategy is. Okay? It requires a lot of mental capacity, but you can do it. You can definitely do it and develop this mental capacity over time because you can actually make life-changing money like that with this way. Okay? So here, this even though everything looks nice, you have 2 legs, price comes in, pushes off, comes in again, pushes off, comes in again, and gives you what looks like a confirmation. Because it's outside of your trading window, it is invalid. It is invalid. So we look at this as an invalidation. Okay? Now what happens if this mitigated within our kill zone? Let's move 11 a.m. here now. And let's say this is like 9 o'clock or 9:30 a.m. Now I can say, oh, great stuff. I want a long price. Yes, let me long price. Let me buy. I want to buy from here. And I want to what? Target a level like this. Okay? I want to target a level. If I make this full screen, what happens? Okay, no. And I want to target a level up here. Okay? Amazing. Or target level up here. I'm now in a trade for what? A 1-to-3. Where do I put my stop loss? I put my stop loss below the structural low. In this scenario, this will be the structural low. Okay? In some cases, when 2 structural lows are very close to each other, I'll just cover the low. I'll put my stop loss below the other structural low. Why? Because as you can see, it doesn't affect my risk to reward by much. If I put price, if I put my stop loss below here, it's at a 1-to-4.2. If I put my stop loss below here, it's at a 1-to-3.3. So I'm only compromising 1R. I'd rather do that than be stopped out of the trade by a very minor amount and not beating the trade anymore than, miss out on this opportunity. So here, if price mitigates during my time zone, I can say, yes, okay, great stuff. I have all of my confluences in place for me to take this trade to the upside and target relevant levels. Boom. And now prices hit my TP, my take profit, and I made money. So if I've now risked, let's say, for example, 1K on this trade, I would have made 3K on this trade. Okay? So now in terms of targets, where do I look to target? Where do I look to target? Okay? Where do I look to target? Before I speak about targets, remember the overall is what? This was external market structure on a high time frame. Low led to a high. This is internal market structure. Okay, price is exhausted externally, so it has to make a what? A retracement internally. It has to make a retracement internally. So now it prints what? Intentional candles to the downside, retracements to the upside. Intentional to the downside, retracement to the upside. Intentional to the downside, retracements to the upside. Intentional to the downside, retracements to the upside. Intentional to the downside, retracements to the upside. And intentional to the downside, confirming a pro-trend bias again by what? 2 legs. 1 leg, 2 leg, confirmation, pullback, entry, gone. So now what do we understand? We understand that any bullish move to the upside from our what? Our discounted level, our external discounted level are looked at and are defined as pro-trend. Any move to the downside, why? Because externally we were bullish. Any move to the downside is seen as counter trend. So can you take counter trend trades? Yes, you can. Of course you can. Is it going to be for long? No, it won't be for long. It's only to fulfill the external expectations of pro trend. Meaning what? This is a low, led to a high. Price needs to come back and fulfill the what? The discounted level below the midpoint of the swing low to swing high pro trend. Okay? Perfect. So now what do we have in terms of targets? I look to target where? Something called unintentional movement point of origin. You see, whenever price is printing scenarios that look too good to be true in trading, it's for a reason. And that reason is that so it traps you. So here I enter the buy and I'm looking to get out of a trade. But how do I know where to get out of a trade? Two scenarios. I either look to get out at levels of liquidity, i.e. levels that look too good to be true, levels that retail traders are in and they're hopeful thinking, maybe they're in sales from here, but they're looking to target all the way down here, but price is not going to do that. Why? Because pro trend is bullish. It has other destinations to fulfill before making that move. Okay? So we look to target these levels, okay? We look to target these levels where what? Where there are early sellers, early buyers, late sellers, late buyers. We target these levels where there are traders who aren't trading with their brain. Traders who just think, oh, trading is easy. I can enter from anywhere and everywhere. Traders who trade patterns. Okay, now these patterns work for some people. Okay, I don't want to bash strategies. Some people it works for them. Props to you. Well done. Okay, but for this strategy, we use those levels as targets. So here now, what can I see? What kind of level can I see? I can see a trend line. For those of you guys who study mathematics in school, trend line is like a line of best fit. A line of best fit. How many times has price reached this level of trend line? You see here, this line I've drawn over here. Price has reached it and tapped it once. Okay, let me use my other marker. Price has reached it once, twice, 3 times, 4th time. No, it hasn't, but it's close. And this is what we need. Whenever price respects a level 3 times, this is seen. Whenever price taps a level 3 times, retail traders see this as a level that is respected. Meaning what? Okay, I can trust this level. I can trust this level. We see it as there are a lot of retail traders here. The stop losses are here, here, here. So we use these levels as targets. Not only that, we use many things as targets. Another example being what? Session highs and session lows. We have a London session and New York session. These are 2 of the predominant sessions that we trade. These are 2 of the only sessions that I trade. So let's say, for example, now, if this is a mitigation at 8 a.m. or between 8 and 11, let's say this is a mitigation at 9 a.m. It's still valid because it's within my kill zone. It's within this time. So what can I look to target? I can look to possibly target the previous day's New York high. Okay? The previous day's New York high in this scenario. Okay, great stuff. Okay? So session highs and session lows can be used as targets too. Okay? So amazing example. The other example is what? Because we understand trendline traders are here, here, and here. This is a what? An unintentional move that institutions make to falsely attract sellers to then later on take them out. So this is our unintentional movement in the form of a trend line. So whenever you see unintentional movement is simply opposite to the intentional move of institutions. Meaning what? Externally, they have the funding to push price. If this is a low that led to a high, okay, there's some institutional intent over here externally. Why? Because price can't move this ridiculous amount without that type of funding. Okay, so we now know, okay, any move to the opposing side is a retracement, yes. Is counter trend, yes. But if it's in a form of patterns like this, like trend line or equal highs or equal lows that we'll get to, the point of origin needs to be taken out. Point of origin meaning what? Where is the level of trend line? Where did it start? It started here. It started here. Or let's say, for example, you want to extend it. If it started even higher, like here, for example, it doesn't look great, right? It doesn't look perfect. But let's say, for example, all of those aligned, it would be over here. But here, the line of best fit. Where you're supposed to draw the line in the place where you can get 3 taps that look the cleanest. The 3 cleanest taps. Okay, 1, 2, 3. So the point of origin for me will be here. If it goes higher, I don't care. Why? Because I already made 3x the amount I put in. Okay, perfect. So that is the level that I would look to what? That I would look to target. That's the level that I would look to target. So far we covered what? The revealed market intent, external, internal. Who's in control? Pro trend, okay, pro trend and counter trend. Now we're going to get into what? Now we are going to get into one of my beautiful, beautiful, beautiful strategies. Unintentional movement, liquidity sweep, expansion. Same example. Now focus. We're about to get technical now. Let's say, for example, now we understand that price does not just move in London. Price does not just move in New York session. No. Price moves in Asia too. But does that mean we move with it? Does that mean we enter in Asia? The answer is no. The answer is no. We don't move, we don't enter price in Asia. However, there is information in Asia, and we understand the Asian session to be either for us, for our London session, or for us in our London session. Some of you guys see the Asia range as your enemy. It's not your enemy. The Asian session has information within it. Study and take in the information within the Asian session because it can help you position yourself for London. Because what do we understand? We understand that London session can either form a what? Either form a continuation. Okay? Or it can form a reversal. Or it can consolidate. Consolidate means when price is just stuck within one region. It's just in the same place. It's not making any higher highs. It's not making any lower lows. It's just stuck in the same place. Stuck within this level here. Okay? And we're going to get into that. So the Asian session allows you to know how to position yourself. So we start by understanding what has the Asian session got to offer. Let's take a look. If this rectangle represents Asia, okay, and I can see overall what price was bearish during Asia. Okay, price is bearish during Asia. Okay. Amazing stuff. I can see who's in control. And now we have Frankfurt session. And now we have what? Frankfurt session. In this scenario, we have price pushing to the upside. And the trend continues to the downside. Sorry. Price push to the upside and the trend continues to the downside. And now over here, we have London session. Okay, put a vertical line tool. Let's say this represents 8 a.m. London time. Okay, this represents 8 a.m. London time. In this scenario here, this looks like a bunch of zigzags, right? But remember market structure. Mark things out. This is a high. This is a low. This is a lower high. Why? Because this high is lower than this low. This is a lower low. This is a lower high. This is a lower low. This is a lower high. This is a lower low. This is interesting now. Unintentional movement. That's a strategy that I spoke to you guys about, right? One of my methodologies. Unintentional movement. Liquidity sweep expansion. In this scenario now, I'm looking for unintentional movement, meaning what? The direction of the institutions is where? Bullish or bearish? Bearish. Why? Because price is continuously making lower lows to the downside. Okay? Where can I see possible retail traders enter? Entering based on what? Euphoria. FOMO. If euphoria and FOMO are existent here, what does that mean for us? That means we need to look for levels where there are late sellers entering the chat. Late sellers entering trades. Okay, another retail concept is what? Retail pattern is break and retest. Whenever traders see a high that leads to a low and this level is broken, they look at the low that it broke and they mark this low out and they extend right. And they say, this looks rather interesting. This looks rather interesting. What takes place here? This is called a level of support. Support is the floor, resistance is the ceiling. Imagine you have a bouncy ball and I'm in this room now and I get this bouncy ball and I throw this bouncy ball with all my force onto the ground. What's going to happen? What's going to happen? Price is going to hit the ceiling, come back, hit the floor, hit the ceiling, come back, hit the floor. And if I've generated enough power, should it hit the ceiling again? But if I need to go to the gym a bit more and get a bit stronger, it probably won't go back to the ceiling again. Okay? So whenever price breaks a low, retail traders see this as support was broken. Support meaning this low. And now when this low is broken, the low, that low now turns into resistance. And resistance is the wall, right? That we spoke about. So if the floor is broken and price hits the ceiling, resistance is the ceiling. And imagine price is the bouncy ball. Price is meant to react to the downside, which it does. But what do we see this as? Retail traders see this as a strategy called break and retest. B and T. Break and retest. So here we understand, okay, lovely. This is our first red flag. This is our first confluence. Our first confluence for what? To know that this is not an area we want to be getting involved in because what is present? Euphoria and FOMO. Euphoria that what? Oh, I know price is going to mitigate this level. Yes, if it just, please give me one more move to the downside. That's what retail traders are thinking. FOMO how? They fear missing out because they saw price react from here. Price react from here. Price react from here. Now they're thinking, okay, damn, like price broke this level. It's going to react again from here, which it has temporarily. So we mark this out as, okay, price needs to come back and hunt this level before we enter. What else can we spot? So this break and retest, retail concept for us is our first form of unintentional movement. Why? Because it goes against the institutional intent. Second form is what? What other pattern can you spot here? We just went over it not long ago. What can you spot? Let me get think to yourself, rhetorical. Trend line, right? Perfect. So here we have 1 tap, 2 tap, 3 tap. We have 1 tap of the trend line, 2 tap of the trend line, 3 tap of the trend line. Amazing. Okay. So now 8 a.m. kicks in. What do we do? Do we say, oh, yes, this is a high. It led to a low that broke below this low. So whenever price comes back into here, I'm going to sell? No. Why? Because unintentional movement lies above. Here and here. I'm not interested. I want to see this cleared. So in this scenario now, I'm going to give you one advice. Okay? I'm going to give you one advice. Whenever you have, let's say, for example, we said we have our trend line here. Oh, let me just bring that back. 8 a.m. Whenever your session, okay, let me just, before I get to that, we now understand that we want to see this level cleared. The level of trend line, point of origin of trend line. What else? The level of break and retest traders that are entering, that are in the trade from here. We want to see this level cleared, meaning we want to see price push above this level for us to consider taking a sell. Why are we considering taking a sell? Because institutions' intent is to push price down. Can we take a buy to the upside? Yes, we can. I'm going to show you how shortly. In this scenario now, what is one tip I'll give you guys? You see, whenever you see a low like this, whenever you see a low like this in the market, okay, and price opens in your kill zone, 8 a.m., whenever 8 a.m. opens on a minor inducement like this, because let's say, for example, hypothetically, let's say this was internal. Okay, let's just say, for example, now this was the 3 minute, 5 minute, 1 minute time frame. Okay, let's just say now this is now internal. whenever price opens up, whenever price opens in your session. So your session opens, it leads to a minor inducement straight away within the first few minutes of your session. If it leads to a minor inducement, i.e., what? Price created this minor inducement right here. If it leads to that minor inducement within the first few minutes of your session, price is most likely going to go where? Okay, first, this is how you enter a buy. Okay, this is how I would enter a buy. Sorry, this is how I would enter a buy. Price had a minor inducement. I'll think to myself, oh, I know where price is going. Perfect. Okay, perfect. But before I get there, I'm going to show you guys this. This is how I would enter a buy. I'll wait for what? Some form of structure to be formed. A move. Structure again. And now I understand that what? This is a low that led to a high that broke above this high. So now in this scenario, I want to see another form of unintentional movement, liquidity sweep expansion. Here, I might get something like this. This is called equal lows. Why do we target equal lows? Because equal lows are an area in price where retail see it as support, the floor. Remember the bouncy ball analogy? Retail traders see this as the same thing. So what do we want to see? We have to see something induced before we enter a trade. So now, price takes out these lows. I don't know why my thing is moving like zigzaggy. Okay. Okay, lovely. We have to see this level induced and get a mitigation. So this idea of unintentional movement, liquidity sweep, expansion is always happening. Moves cannot happen without this. It cannot happen without this. Any move cannot happen without this. Inducements are the what? Are the driver of moves in the markets. So here you have price coming in. Session opens. What if you have no POI? What if price doesn't mitigate a POI in your session? In your session open. You don't need a POI to trade. You need inducements to trade. See here. We now understand that this is a break and retest zone. Price broke this level, it's retested it. Sorry. We now understand that what? This is a zone that has caused what? A level of trend line. Price has broken below this level. No POI. We don't have a point of interest there. Pushed up, came back down, pushed up. Okay, gave us some sort of structure that is breached. This is now our change of character internally. Gave us equal lows, i.e. what? Retail stop losses are lying here. We have an inducement of those equal lows. Not only an inducement of those equal lows, what else do we have? We say retail see this as this is a low that led to this high, that broke above this high. So whenever price comes in here, I'm going to buy. And I'm expecting price to push to the upside. But it doesn't push to the upside. What does it do? It violates that zone, pushes to the downside. And now we get a mitigation. So now we can buy from here. And this is what I'll be looking to buy. Up until where? Am I going to have some nonsense, hopeful, wishful thinking? Nope. What I'm going to do is I'm going to look to buy here. Place my stop loss below this low. Is this low very close to this low? Yes. Let me just cover this low as well. Great stuff. Where should I target? The point of origin of the break and retest zone. Okay. The point of origin of the break and retest zone. Or the point of origin of the trend line. So now, the risk to reward ratio on this isn't the greatest, right? It's only a 1 to 2. Remember, I told you guys I know exactly where to target. This is the only time you don't. I won't look to take profit at the point of origin of the unintentional movement. Whenever your session opens up on a minor inducement like this, okay, and it gives you confirmation for buys, okay, and it induces lows, as in it induces the lows, okay, price opens up, it opens up on a minor inducement, gives you confirmation to buy. Price is 8 times out of 10 going to something called 50% of the MRA, 50% of the Asian range. We mark this box out as Asia, right? Where's the midpoint of Asia? Here. And you'll find that the midpoint usually aligns with what? An area that was tested a lot during Asia. Okay? This can be an area of retail support that broke and became resistance. Okay, you'll see something like this. Okay? This area was tested, broken, come back, tested. And when you're aligning like this, 50% of Asia, and you put price all the way up there, price will usually test 50% of the Asia range. So now instead of taking profit at a 1 to 2, I'm able to maximize my rewards by what? Taking profit at 1 to 4.8 or 1 to 5 overall. You see, just because what? Just because price opened up on a minor inducement, create the structural level that means nothing, came back down, create another leg to the upside. Okay, I'm interested now, but I can't enter straight off a change of character and break a structure. It's too easy. I need an inducement. Creates equal lows, induces that. So this is now my unintentional movement. This is my liquidity sweep. And now this is where I look for my what? My expansion. Intentional move to the upside. To what? Mitigate 50% of the MRA. And price doesn't just mitigate 50%. It can mitigate 50% of Asia. Okay, if I move this line, it can mitigate 61.8% or 78.6% of Asia. Anywhere above the 50% of Asia. Okay, and what's the intent behind this? The institutional intent behind this is so that institutions can make moves secretly without retail traffic entering. Okay, and the Asia session is something. It's a taboo, to be honest with you. It's a taboo. People just avoid it. Trading the Asia session, yes, avoid it. Why? Because it's not a large liquidity session for the pairs that I trade, like EU and GU, Euro USD and GBP USD. So in this scenario, institutions look to make moves secretly off of these levels. Okay, so whenever you have this entry model where price opens up on a minor inducement, you can look to take price to 50% of the MRA. Okay, so that was unintentional movement in terms of when price opens up on a minor inducement. Let's just say this was your same setup now. Where can we look to take profit? Point of origins of unintentional movement. Retail zones like break and retest. Okay, 50% of the Asian range. And now from this level, what are we? Pro trend or counter trend? We are pro trend. Why? Because pro trend price was what? Bearish, intentional. Okay, and if we actually take a look at the behavior of this may have not even moved as such. This may have taken quite some time to move. Okay, closing the gaps. Oh, let me draw it better for you guys. Closing the gaps, and then from here, what do you have? Sorry, I'm bad at drawing. From here, you have your intentional movement to the downside again. And now this is where you can look for something called buy to sell trades. So you enter here, you exit here, and now from here you can enter a sell. Aggressively? Yes, you can. My second entry model. Aggressive entries. This is a high that's led to a low already. Why do I need to wait for a change of character? It's already happened. This high led to a low. It broke structure, which is more confirmation of what? The overall trend. High led to a low. Swing high, swing low, 50% of it. Am I above 50% of my range of swings? Yes. Price mitigates the supply. I enter from here. If I miss the aggressive entry, which is absolutely valid, as long as it's within my kill zone, my time window, I can look at this high. That breaches this low. And from here, I just wait for one more inducement. Unintentional movement, liquidity sweep expansion again to take a sell to the downside. Simple as that. Simple as that. Okay? So in this scenario now, let's say for example now, I'm now looking to sell. If I look to sell now, where can I look to target? Okay? If I look to sell, I'll place my stop loss above the high. And now I'll just target, being modest, I'll just look to target the previous low, the low of my session. Okay, the low of my session. Right here. Why? Because price is most likely to get here before it goes all the way down. So now, how do you know? How do you know how long price will move for? How do you even know when price will move? Alex, how far are we in? 2 hours, yeah? Amazing. So how do we know? How do you know when price will move, how it will move, when it will move? You see, what we do is we identify something called the previous day structure. If I go on the daily time frame now, this, each candle represents 1 day of movement. Okay? Each candle represents 1 day of movement. All I want to do is look at the candle to the left, the previous day's candle. If I'm looking at this candle, I don't want to understand where I am for the day. I want to look at the candle prior. If I'm looking at this candle, I want to know where I'm at for the day, I look at the candle prior. Okay, there's information within here. There is information within the wicks. Okay, so let's say, for example, now we can say, okay, structurally, this is a daily high, this is a daily low. High, low, high, low. Why? They've all led to something. This is a high, it led to a low. Meaning what? This is the new low that we have to see breached. This is a high that led to this low, that breached this low. This is a high that led to this low, that breached this low. So now, what can we expect? Oh, is this going to be a high? Okay, that holds, and can we get is it going to be a retracement that leads to a low, to the downside? Let's see. So in this scenario now, this is vital information for us. Why? Because we can now say, okay, great stuff. Externally, we understand. This is a high. This is a low. Where is the midpoint? Fib. From the high to the low, because price is bearish. 50% is here. Anything above it is where? Within this region. So we mark out 50% of that overall zone, which is where? Around about here. Anything above it, can we expect any bearish momentum? Let's see. Price can most likely flip from a level like this. Whether it's temporarily, that's another question. Okay, why? Because we can easily look and see perspective-wise. What if this is a low that led to this high, that broke above this high, and now price has come to where? 50% of what? This range, this low to this high. Now 50% of that is where? Below here. You see? And that's where, when you become better at analysis, you start to see these things and you're able to understand where price is going to go. So now, going back to the example, let's say, for example, now when we're talking about daily ranges, let's say the previous day looked like this. Let me use this tool actually. Let's say the previous day looked like this. Okay. And let's say this is within our London session. So this is 8 a.m. 8 a.m. London time. Okay, 8 a.m. London time. If this was the previous day's low or structure from the previous day, let's say, for example, this is the previous day's low, and this is just a structural level, but it's from the previous day. Meaning what? Let's say this is Tuesday, and let's say this is Monday. Both of these are Monday. Both of these lows represent Monday. When price induces any of these levels, if it happens within our kill zone of what? 8 a.m. or 2 p.m., if this low is breached on the 1 hourly or the 15-minute time frame, is not a minor inducement. It is called a medium inducement. When the medium inducement occurs, it is a sign that price is going to reverse. And a medium inducement is where price breaches a structural level from the previous day. Okay? From the previous day. So now, what does it lead to? Does it lead to an absolute ridiculous pro trend move? No. It just simply leads to the move of the day. Okay? It leads to the move of the day. So now from here, what can we expect? We can expect price to do what? We can expect price to polyline. We can expect price to push to where? Push to the upside. Whether it takes out this high, yep, move of the day. That's the move of the day. So whenever you get a medium inducement within your session, the inducement has to happen in your session, is going to lead to the move of the day. Okay? It will lead to the move of the day. So now, in this scenario, imagine we had the same setup as before. Without this, without the medium inducement, okay, we can do what? Without a medium inducement, we can expect a what? Continuation. With the medium inducement, we can expect a what? Reversal. So let's say, for example, now the trend was bullish. Let's say 8 a.m. was here, for example. Okay, let's say 8 a.m. was right here. Okay, let's say it was right here. 8 a.m. was right here. And let's say now this is a high from the previous day. And price took the previous day's high within our kill zone. This would not happen. Price would not make a new higher high. Instead, price would do what? Make the move of the day and create a reversal to make a new low. You see, it will flip the bias in terms price will reverse. Price will reverse from the desired direction. But let's say, for example, there was no medium inducement. Let's say, for example, this didn't happen at 8 a.m. Let's just say, for example, 8 a.m. was here. Okay, we can now say, oh, okay, this is just a normal inducement for price to use as an excuse to facilitate what? The continuation to the upside. The continuation to the upside. Why? Because you have something called decisional and extreme zones. A decisional zone is a zone that created the BOS, and the extreme zone is typically the zone that created the change of character, i.e. the zone where if this zone was to be breached, the entire bias would change. So price would no longer be pro-trend bullish. It would turn bearish. You see? So because we have no medium inducement, okay, because we have no medium inducement, this is just seen as a typical, normal, probably a minor inducement on the lower time frame. Okay? And then if the session, especially if the session opened on a minor inducement, we can look to buy price from here and ride price to where? 50% of the MRA, for example. This is the Asian session right here. Okay? That's exactly what would happen. So now, what I want to go through is some examples. I want to go through some examples of how you can find certain trades in the market. We're not going to backtest. We're just going to simply go over this just to show you guys how you can find trade. Actually, you know what? Before we go through examples, what's the next part? Is it my trade? Yeah. No, I want to show you guys this first. Excuse me. What I want to go ahead and do is I want to. Where's my indicators gone? Okay. Okay. I like to use these session indicators. I don't know where my other indicators have gone. London. Change the colors of this. If I'll make it all blue, it'll look a bit confusing. Let me change this as well. Okay. This is labeled London. This is labeled New York. And this will be labeled nothing. Asia session, okay? Okay, perfect. So here, what I want to go ahead and do is I want to go ahead and find examples that I can show you guys. Today's date is what? 16th of October. Let's just go back to the previous week. Okay, let me just turn this off. Okay, perfect. Let's go from Monday. So from here, what I want to go ahead and do, I want to go ahead and find opportunities. So if I take a look at London, I want to look at 8 a.m. 8 a.m. Simple, clear as day. And remember, not every single day is your day. Okay? Not every single day is your day. Let me just go in replay mode and then hold on. Let's go into replay mode. What's the date today? October. October. October 16th. Monday. Okay, perfect. Let's just open up on here. Okay. We'll play price. We see where the significant moves took place, and then we analyze what happened. Okay, London session opened up. Let's take a look. Drop to the 5 minute. I want to get my vertical line tool. Place it at 8 a.m. 8 a.m. What's happened here? Let me go to the 1 minute time frame and the 3 minute time frame. What can I see over here? Okay, amazing. Amazing, amazing, amazing. What can I see? Typical. Where's my unintentional movement? This is a high that has led to a low. This is an engulfing candle. Why? Price has engulfed the candle prior to it. I extend this. I draw a box wick to wick, extend it right. What happens over here? This high is close to this high. So I include the entire zone. And what happens over here? Price leads to the low, causing what? This right here. What type of traders are invited? Break and retest traders. Why? Because price broke the level, came back in. Remember? Price broke the floor. Price broke support. Support turned to resistance. It gives a temporary reaction, takes them out of the trade, mitigates our level. And now, what time is it? It's 8 a.m. Price mitigates at what time? 8:39. We sell from here. Stop loss goes above the high. It's very important to know that when two highs, two zones are next to each other, just cover the high. Okay. Turn off session indicator. Okay, just to look. And now what I want to do is look to the left. I always want to look to the left to see where can I possibly target. You know what? What do we say? Whenever you have a trade that gives you a good risk reward ratio, just target the most recent low. Same example I gave you guys earlier, right? I don't want to give you guys any new examples. anything too advanced. Like there's a lot more to cover, but let's just cover the things we went through today. So here, I'll cover the lows, target the lows right here. That's a nice 1 to 5.8 risk to reward ratio. Just by applying what we learned on this call alone, straight away. Okay, 1 to 5.8 risk to reward ratio, just by targeting where? Okay, the low that was at 7:50. 7:50 a.m. This low was created. You entered the trade at 8:39. Price hit your take profit in literally 1 minute. 1 minute. In 1 minute. In 1 minute. Meaning what? If you had put down, well, not put down, but if your lot size accumulated to risking 1%, okay, and you risk, let's say 1% on a 100K funded account, and you risk 1K on this trade, you would have made back $5,800 on this trade in 1 minute. Now, it doesn't usually happen this quick. I'll be honest. This is very rare to see price hit your target in 1 minute. But because we are intra-session traders and we're intraday traders, price typically tells us if we are correct or incorrect very quickly. Okay, but this is rare, but it's possible. It happens frequent. Frequent, even though when I say frequent, I mean you can hit take profit in 5 minutes, 15 minutes, 20 minutes, very, very frequently. But in 1 minute is rare. Okay, so now let's move on. Let's see what happens in our New York session. In our what? In our New York session. Turn on the sessions indicator. Once again, play price. Wait for 2 p.m. to come. Is it 2 p.m. yet? No. And what's happened after that? Okay, 2 p.m. 2 p.m. So now we have what? Reveal market intent, price push to the upside. Can we find any entry? Okay, this wick looks like it has some information in it. This candle looks like it has some information in it. They drop to the 5 minute and they drop to the 3 minute and then the 1 minute. The 5 minute, 3 minute, 1 minute are typically my entry time frames. Okay, I like to look for entries from them. Okay, amazing stuff. So here, what do we have? We have let me drop to the 3 and the 1 minute. And the reason why I rotate between these time frames is I like to look for what the cleanest looking time frame is and unmitigated zones. This is a low that led to this high that broke above this high right here. Okay. This is a low that led to this high that broke above this high right here. When I take a look at this, what can I spot? Impulse candle. Impulse candle is one of my favorite entry models. Impulse candle, candle prior. Whenever you see an impulse candle that's led to something, that's broken something, mark out the candle prior to it. Wick to wick, extend right. Mitigation. What time is this? 2:30. A lot of moves happen within this time, guys. Okay, from 2 p.m. onwards. 2:30 is a time a lot of moves happen as well. So here, what do you get? This is your entry. And then you have what? Your stop loss goes below the low now. Give it some breathing room as well. A breathing room. Okay. Where do you look to target? Where's the London high? Okay, the London high is here. Remember how we spoke about targeting session highs and lows? Let me turn off the sessions indicator so it looks cleaner. That's a nice 1 to 11 risk to reward ratio. In how long? Let me go to the 15-minute time frame to count it properly. Easier. 15:15, half an hour. 15:15, 1 hour. 15:15, half an hour. 1 hour and 30 minutes. 1 hour and 45 minutes it took for you to hit a 1 to 11 risk to reward ratio. This means what? If you risked 1K on your funded account, you would have made 11K, 11.5K just from this one trade. Okay. Let's play price and let's wait for the next day's London session. Let's take a look at what happens. Asia session opens up. London session opens up. What do we get? Okay. In London, we had no medium inducement, so price forms a continuation. 8 a.m., where are you? Right here. Let's take a look now. Let's take a look. This wick here has some information. This could be a minor inducement of a break and retest level like this. Price induces, mitigates a level of supply. But let's go through 1 minute to confirm that. But this is what I can see so far. Amazing. 8 a.m. 8 a.m. What do we have? What do we have? We have unintentional movement in the form of what? Trend line. 1 tap, 2 tap, 3 tap, more taps as well, 4 taps. Okay. Do we have trend line to the upside here as well? Yes, we do. But who's in control? Sellers. And in this scenario, what happens? Let's take a look. Price creates a high that leads to a low. Okay. Or let's say, for example, now this low. Whenever you see a wick rejection and price pushes to the upside, this is a sign that retail are entering. Low, high. Look at this wick. Where does this wick go? This is a low. This is the low that was broken, right? Look at this. Break, retest of this level. Price pushes away. Because it's pushed away, I can consider this level. I will consider this level. Why? Because I know, okay, price broke the level, retested it, pushed away, retail entered. Not only did retail enter, break and retest traders entered. Not only did that happen, what happened? Price formed a what? What appears to be a bearish order block. Bullish candle, followed by bearish candle, followed by bearish candle. Extend right. Price wicks. Makes a temporary move to the downside. That's the trap. That's what? The late seller's trap. Euphoria, FOMO. Okay? What happens here? Price pulls back into this region and does what? Let's go to the 3 minute now. Now this way you combine the 3 minute. Induces the break and retest traders. And what does it do? Okay. Induces the break and retest traders. Impulse candle. Candle prior. Box. From the wick high to the wick low. Extend right. Mitigation. Short position tool. Entry. Stop loss above the entire zone right here. Why? Because this is a congested area. Now, turn on sessions indicator. Look to the left. Look to the left. Where can we target? London low. Take profit, goes to the London low. Turn off sessions indicator just to keep it clean. Zoom back into that trade. What happens here? Has price gone there just yet? No, it hasn't. But you can see. Okay, let's look to the left. Is there a reason for that? Is there anything we've missed? Okay. Price created what? 1 leg. Price created 2 legs. Price pushed off. Okay, this is what we've ignored then. What can we see now internally? Internally now, we want to look at what? Structural levels. This is a high. This is a low. That broke below this low, where we had the bullish reaction from. This is a low that led to this overall high. That did what? Broke above this high. If we now take a look at what? The range of this low. And now let me delete and keep it clean. And what? The range of this high right here. That broke above where? This high. Where is 50% of that range? Fib from this low to this high. 50% is here. What does that align with? The candle that broke above where? The candle that broke above this. So you can also use impulse candles as TP targets. So now if I go to the 5 minute or 15 minute, I'll definitely find something within here. Probably find it on the 5. Perfect. Impulse candle that broke above this high that led to this internal low. What do you do with the impulse candle? You mark out the candle prior. And you can also mark out the imbalance that lies between her. You see? Imbalance, wick to wick. Wick to wick. Or we can have the impulse candle, the entire zone, extend right, and that will be a nice TP target right there. See? Look, the target is level here. What's the risk to reward? A nice 1-to-3 risk to reward ratio on this trade. In how long? From your session? 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 5, 10, 15, 20, 25, 30, 45, around an hour and 40 minutes. Your TP target was hit. Meaning what? If you risked 1K on this trade, you would have made 3K. New York session, let's take a look. What happens? What happens in the New York session? Price, we get a push up or push down. Okay, we get a push down. What's happened over here? What has happened? Let's take a look. Vertical line 2. 2 p.m. Amazing. I want to ask myself, what did this cause over here? What did this what? What did zone cause? Okay. Did we get a medium inducement in our key window? No, we didn't. So what happens? A continuation. We get a continuation move. But before the continuation, what takes place? We have an inducement of what? Inducement of what, guys? Can we see? If we go to the 1 minute, what takes place? We have an inducement of equal highs. This is your unintentional movement, meaning what? Retail resistance levels here. Price induces equal highs and mitigates what? We now have, go back in the 5 minute, just to keep it cleaner. We now have what? This high that led to this low that broke below this low. Mark out this right here. This is the swing high, this is the swing low. Let me delete this short position tool. Actually, let me keep it there. We have this swing high. Okay. We have this swing low. 50% of it is where? Swing high, swing low. 50% of it is right here. Anything above 61.8, 78.6. What happens? We use this high as the inducement. Okay. Equal highs. The equal highs that we spoke about. Remember, the equal highs. Price induces the equal highs to do what? Impulse candle. Engulfing. Candle prior. Wick to wick. Extend right. We have a trade. What time does it mitigate? 4:45. Right before our window closes. Stop loss goes above. 4:45, you're already in the trade. Where can you look to target? I'll just look at target. These relatively equal lows. Simple. TP goes right here. If you risked 1K, you would have made 6K on this trade. So now just recapping on the trades we've taken. Of course, this is not the live market, but just to recap. The first trade was at 1 to 5, meaning what? If you risked 1% to make 5, you would have made around 5K on this trade. Meaning what? You're only 3K from passing your funded account. If you took this trade here, you would have made 11K. Okay, meaning what? Your phase 2 would already been done. Okay, way before it even hit 1 to 11. Okay, now you're on phase 2. You're on phase 2 now. You're on phase 2. If you risked 1% to make 3%, this would have been 3K up on your 100K account. Now you have what? You have 2K. 2K left to pass. Next trade, you catch a 1 to 6. You made 6K on this trade. You pass your phase 2. You see, even with a 0.5 risk to reward ratio, you would have still been up on your account. Okay? And even if you risked 1% and you're factoring in partial profit taking systems, you would have still been up on your account. There's a lot of detail. We can't go over everything in this call. It's going to take way too long. It'll take weeks. Okay? But what? But it's important to understand that you're not going to lose 10 trades in a row, 20 trades in a row. If you are, I guarantee you it's because of a psychological error that's taken place. You see, psychology is a very, 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 very important part of trading. But when you're trading funded accounts, guys, the way to make it isn't by just aiming for a home run. No. The way to make it is by really understanding and cultivating this habit of scaling accounts. The only difference between you and me on the charts is probably I'm not sure, probably because I have more capital than you. I'm just trading larger capital, larger volume. So my percentage, my 1% risk might be, I don't know, 6K, 7K. Okay? 5K, 3K, 2K. Okay? 10K, whatever the case may be. Your 1% risk might be $600, $200, $100, $50. You see? It all depends on account size. So the more accounts you have with prop firms, the better it will be for your trading. Now I understand not everybody can afford having multiple accounts, but if you're looking to scale and use trading to actually change your life in the quickest way possible, you're not going to get rich quick. But I'm saying if there was the quickest way possible, it would to acquire more funding, get more funding, because the larger capital you have, the more money you'll be able to make from these basic moves. These moves aren't absolute like crazy. No, these are normal moves that happen in the market day to day. They are very modest risk to reward ratios, apart from the 1 to 11. But typically, this is a very modest risk to reward ratio. You see, these are moves that happen quite often in the markets, guys. So in order for you to actually use trading to change your life, you need to understand that the goal is to have more funding. The goal is to have more funding. And the goal is to understand that what? The goal is to understand that when it comes to the overall spectrum, okay? When it comes to the overall spectrum, with regards to funding, and I've given this example before, okay? When it comes to the overall spectrum of trading, you're not going to take 10 losses in a row because of a bad strategy. You're going to take 10 losses in a row because of what? Because of bad psychology. And in this scenario here, if you just take a look at yourself visually, okay? Visually, and you take a look at the trajectory of your overall state of your funded account, okay? One bad trade, 99K, will be your equity, your balance. Two bad trades, 98, 3, 97, 4, 96, 5, 95, 4, 94, 3, 93. This domino effect doesn't happen because of a bad strategy. Okay? It doesn't happen because of a bad strategy. It happens because you're unable to tame your mind and really believe in your system. You see, when I said to you I made $197,000 in 11 trading days with a 30% win rate, okay? With a what? 30% win rate. That means like out of 10 trades, I've won 3. It doesn't mean 10 trades in a row. No, it just means overall, okay? But I believe in my strategy and my system so much that when I take these losses, I literally do not care. Like I was on a live call with my private community members in the private circle to take profit trading the other day, doing a live trade. I got stopped out of one trade. I quickly realized my mistake and forgot there was a zone that there was an aggressive entry present. And I took the aggressive entry and I ended up making a lot of money. Okay, on one account, I made like 4.8K, a very modest amount. But on my other account, I made some bank on that trade. Okay, and I'll show you guys the trade I took earlier on. in a few. The point I'm making is you're not going to get from here to here because of a bad strategy. You're going to get from here to here because of a bad psychological state of mind. And it's imperative for you to understand that in order for you to get to the other side, the break even / profitable side, you are going to have to trust this system 100 billion million gazillion trillion %. Okay? Because going from here, 100K, going from 100K to 90K, believe it or not, it's actually harder. It's actually harder than going from 100K to 103. Going to 103 is easier. Ask yourself a question. How many of you guys that have been funded before, or phase 1, how many of you guys have seen 103 in your equity? But you didn't close because you wanted to pass with one account because your favorite influencer told you full port. He's telling you full port because he's got deep pockets. You can't full port because you work a 9 to 5. And if you blow this account, you have to go back to working for 1 whole month before you buy a new account. Think of your brain, guys. And use your mind. Because there is sight and there is insight. Sight is seeing with your eyes. Insight is seeing with your mind. Some of you guys don't see with your mind, and that's your issue. That's your issue. Because if you saw with your mind, you would understand, hold on, 3K, 1K, 2K, 3K. This is what I make at work. I've never seen profit from trading. Let me pay myself to believe this thing is even real. Yeah. What do you guys want to do? You want to be on the opposite side of the spectrum instead. Minus drawdown, minus, and you've lost your funded account. Now you have to save up another £400, £500 to buy a 100K account. And on the other side of the spectrum, you saw 1K, 2K, 3K, 4K, 5K, 6K, 7K. You're like, oh, I just like the way 10K looks. Then what happens? You eat away from your profit. You go back to 6K, 5K, 4K, 3K. And this is all in one trade. You haven't even closed the trade, by the way. This is just floating profit. And you end up where? Back at break even. And now you're chasing that 6K, 7K again. You want 6K, 7K because once upon a time you saw that, but it slipped away. And now you're grateful for that which you had, but you didn't realize. You unrealized those gains. So now what? You go deeper and deeper and deeper and deeper and deeper into drawdown because you can't manage yourself. And this is why psychology is an absolutely vital part of trading. Can we pull up the psychological presentation, please? Alex, let me switch presentations, please. Amazing. You see, psychology is a very, very, very important part of trading. Without it, you have nothing. Without it, strategy means zero. Without it, you have no backbone in this field. Without it, you are in a classroom without a teacher. Imagine a classroom without a teacher, or a church with no preacher. Imagine a country with no leader. That's the advice that was given to me from one of my older brothers. Imagine trading with no psychology. It's a road to confusion. It's a road to destruction. It's a life. It's a methodology with no order. Zero. You're going to be stuck. The difficult part in trading is not technical analysis. I promise you, it's not. It's not, guys. The difficult part is mastering yourself. And this is a psychological myth. You see, you are not failing in trading because you don't know enough technicals. That's not the case. How many of you guys can open a chart and do your thing, go crazy, right? You can analyze top down with confidence. You see, you're failing because you don't believe in them. You don't believe in these methodologies that you're trading. Good psychology with a bad system can still make money. But bad psychology with a good system will keep you in the loop. The same way we spoke about that Ferris wheel, the hamster is on. Same way. Now, this is a famous quote. It's not that you don't know what to do, it's that you don't do what you know. How many of you guys get stopped out of a trade and say, "Oh yeah, I can. Oh yeah, now I realize. Okay, I saw this. I see this. I see this." For me, it's the same. For me, sometimes I get stopped out. I'm like, I shouldn't have made this mistake. This was a silly mistake, and this happened on my last live call. I made the silly mistake. I corrected it quickly. Then I made money. You see? So it's normal. I'm just like you. I hit stop loss. I take losses too. It's just that I know how to manage my losses, and more importantly, I believe in my system because it's made me a ton of money. Guys, I made £300,000 in a single month. The presentation later says dollars, but it was actually pounds. In a single month from trading alone. No course, no mentorship, nothing. Just trading alone. With not the greatest win rate. Why? Because I believe in my system. You see, mastering yourself is fundamental. It's fundamental. And belief systems have a foundation because your belief system shapes your actions. It changes your old beliefs and programs yourself to learn and think better. Okay? Imagine having a strategy you don't believe in. What place, like what actual place are you going to dig to search for motivation to carry on trading the strategy? Nowhere. So a belief system is absolutely important and vital and imperative for you as a trader. You want to know that this works. Okay? You want to know that this works for you. Emotional resilience, that's what's going to get the better of you. You see, losses, as I've spoken about time and time again, it's inevitable that losses are going to happen. Whether you like it, whether you don't. If you don't want to lose, don't get involved. Don't get involved with trading. But losses aren't a bad thing. Losses are not a bad thing, guys. Losses happen. You see, when you're someone who doesn't believe in a system, you see a loss as a personal attack. But when you're someone who believes in your system, you see a loss as what? You see a loss as data collection. I get stopped out and think, oh, snap. This is a rookie move. I shouldn't have missed this. Where did I go wrong? Okay, this was this little cheeky zone I missed out. I didn't look this, and then I adapt. The most profitable traders are not those who know everything or those who are correct all the time. The most profitable traders are adaptive traders. And sometimes for you guys here that have been trading for a long time, sometimes this is what you're missing. Actually ask yourself, are you genuinely adaptive? Are you genuinely adaptive? Or when you hit stop loss, you use, oh, I'm done for the day as an excuse to just hide the fact that you're not an adaptive trader. You're just scared. You're just scared. You don't want to take a loss because you just love feeling the W's, right? Humans, why do we just love seeing green? We never love seeing red. Why do we love the idea of everything flowing smoothly in life? I understand nobody wants to feel pain, right? But ask yourself this: any human being who's achieved a great level of accomplishment in life, whether that be a leader, whether that be an entrepreneur, whether that be someone who had a purpose, a dream, and they've been able to fulfill that dream, ask yourself this question: any inspirational, authoritative figure in life, have they gone through adversity? The answer is yes. So while you're here praying for daffodils and rainbows and a smooth path to changing your life, your family's life, your generation's life, for those of you who care about your generation, I'm not sure if I care about those guys like that. Okay? Because after a certain point, I'm like, hey, I don't even know you, man. That's just your great granddad, right? I'm only joking. I'm not joking. But my kids, I think it stops there. After my kids, do I really care? No. I care, but you guys know what I mean. I'm pretty sure you know what I mean. But the question is what? Ask yourself, has any person who's achieved a level of greatness endured adversity, conflict, mental barriers and challenges and obstacles along the way, unexpected hurdles? Of course. Right now, I'm on this Zoom call with you guys. Right now is probably one of the most difficult moments I'm going through personally in life right now. I've taken major L's this month, not in trading, just life in general. Like a few things went wrong that I was planning for. I've had to cancel some ideas that I've had, some plans that I've had going forward, major life decisions. Unexpected emergencies came out. I'm still here. I'm on a Zoom call with you guys. Why? Because my mission doesn't change based on my feelings. I've got a purpose to fulfill in this life. Which brings me back to my point. Why do human beings love to walk through this valley of daffodils and rainbows and expect a smooth outcome when the smooth outcome is non-existent? What you're chasing lies at the end of what? What you're chasing lies at the end of the valley of fire. You have to walk through the fire. Walk through the fire. And instead of asking God to lighten your burdens, make this easy for me. No. Redirect your mind and ask God to give you broader shoulders so that you can endure more pain. Because those who are successful are those who have what? Endured the most pain. You get stopped out, you start crying. This is not for you. This is not for you. Getting stopped out of a trade is normal. Data collection. Reprogram your mind. Whenever you get stopped out, data collection. If there's no data collection, you're emotional. You're never going to make it. Quit now. Leave this webinar. You're never going to make it because you're just emotional. You're just emotional. Fix your emotions. This is we're talking multiple trillions a day in this industry. Of course, you're not going to make multiple trillions, but this industry is so broad. It can pay you so well if you just learn how to be the shepherd of your mind. Just become a shepherd. You feel your thoughts going this way, let me revenge straight up. Get the stick. Beat your mind. Tell her get back in line. get back in line. Beat your mind. Whenever you feel yourself going astray, ask yourself, why? Why did I start this? Not only why did I start this, but what's required of me? Like, what's actually required for me to become a profitable trader, man? If I've been trading for 6 months, you've been here for how long? Or if it's your first day, this is going to pay you goddamn well. But you just have to know, if you violate the rules that trading has, you will never see success. I don't care how many mentors you've been through. I don't care. You will never. I'm not supposed to be telling you this, right? Because I'm meant to be someone who, I have a course, go sign up. No, I'm not meant to be. You're not going to see success if you are a disobedient, rebellious individual who never follows rules. Good luck. Good luck. You have to hear it just like this. Sorry. I'm not going to be someone who sells you a nonsense program and acts like everybody's going to win. No, bro. Not everybody's going to win. This industry is only going to reward those who take themselves seriously. When we say who's serious, who's serious to listen to me? I don't care. I'm already in the position. I've made my mills. Respectfully, in the most humble way, as your brother, guys. Yeah. When I'm speaking like this, I'm speaking from a place of passion to let you guys know this industry is going to physically smack you back in line. Because if you act out of line, you are going to be punished financially. Have you ever disobeyed your teacher in class and been given a detention? What did you lose? Time after school. You're meant to go home, but you're not home. You're in school, right? Trading is that teacher who will put you in detention, except this detention means you lose money. You lose money. You feel it. In my first year, I lost 7K of money I didn't even have. I was mopping floors, cleaning toilets. Being an estate agent, got fired because I was on the charts. How do I even have 7K of my own money? How? I lost 7K of my own money my first year. Why? Because I'm naturally an impulsive person. I'm very passionate. I like to say, go big or go home. Yeah, come with this attitude. I'm going to make it out the hood next week. No, I got humbled very quickly. And you'll be humbled, just like I was humbled, if you don't learn to follow risk management, if you don't learn to understand the session timings, if you don't learn to understand your entry models, if you don't learn to understand invalidations, if you don't learn to understand your average session pip range, if you don't learn to understand where is the valid TP target, is it all the way up there, or for this trade, is it over here? What type of trade is it? This is what you have to know. I can't give you guys everything on this call. Of course, I can't. There's just not enough time, guys. It will take me weeks to train you. Okay? But I'm trying to give you guys as much as I can, as you can see the passion behind this, as you can see. Okay? Guys, take yourself seriously, because sometimes your result isn't coming, not because you don't know enough technicals. It's because you don't know enough about yourself. Or for those of you who do, you're turning the mirror upside down. You can know something about yourself when the mirror can be placed right here. You can look at yourself and you can see the position you are in. You can see the bad habits that you have in life. You can see the same repeated mistakes that you're making day in, day out. Yet you choose to neglect the reality that you are faced with, and you put the mirror down. And you open the laptop and carry on trading. You're never going to see results like this until you face that person in the mirror and you say, today is the last day. Today is the last day. Today is the last day of being a rebel. And today is the first day where I will cultivate positive habits that will make me a good trader so that I can hope to see profitability. Why? Because I'm a very good technical analyst. But unfortunately, technical analysis does not pay. When technical analysis is coupled with a bulletproof mindset who understands money management, risk management, trade management, trade reality, realizing unrealized gains, sessions, kill zones, entries, validity of zones, maturity, being able to say no to FOMO trades, no to what deems to look like euphoria, and say, I'm okay, because I'm actually done for the day. In terms of what? My targets. I've hit 2 beautiful trades. I'm grateful. I'm good. Sorry, I'm not entering. I'm done. I want to enter the trade and live a holistic life. Mind, body, soul. Go to the gym. Go for prayer. Go here. Come back. My life doesn't revolve around trading. Especially not anymore. Like now I'm branching into the software space. I'm looking to have, hopefully, with the plans that I've got, high 8 to 9 figure exits. I want to be in a position where you tell me 50 mil, I look at you and I laugh at you. Respectfully. Why? Because trading has allowed me to see the possibilities of money to the point where when I now use my mind that was built by trading, I can go into other industries now and say, you know what? Trading has conditioned me to be this individual. Ask any of my friends. Ask them, how was Yarimi when he was younger? They will tell you the kind of person that I was. Reckless, rebellious, cheeky. I was very charming. Meaning what? I talked my way into a lot of situations in life. I tried to be cheeky in these markets. I got slapped in the face. First time ever. I was like, whoa, this usually works. What's happened here? You know? So for me, I began to see results when I changed the person that I was in the markets, and trading made me a better individual, and it actually gave me a better sense of business acumen, to be honest with you. So trading pays dividends in other areas of life. Once you pay yourself with what? Paying attention. And paying attention doesn't just mean joining this webinar. It means paying attention to yourself and paying attention to that mirror that you put down. So losses don't mean that you are failing. Okay? Or trading doesn't work. Can we get the presentation back up, please? Drawdown tests your discipline. And it tests your belief of what? It tests your belief in your system. Do you actually believe in your system, or are you now panicking because you're in drawdown? Because one trade can get you out of that. So it's not the skill. You see, it's not the skill. You need to be patient and you need to be selective. Patient with what? Knowing that if a trade isn't in your zone at your correct timing, it's most likely going to fail. And you need to be selective with your zones. Okay, if this zone hasn't led to any significant inducements, do I really want to take this trade, or does this zone look better? Because if this zone that I wanted to enter from is induced, that can now be the driver that will what? Facilitate and give me a solid, more of a solid confluence that the extreme zone that I wanted to enter from will be mitigated, and price will move from there and hit my take profit. So our job as traders is to analyze, execute, and manage risk. Manage risk is very important. Entering is very important. Entering and exiting are just as important, because you can't exit that which you have not entered, and you can't enter what? You can't enter a trade. You can't take profit when you haven't exited. Okay? So the takeaway is what? That consistency begins with being consistent in life yourself. Emotional control. Hesitation is fear disguised as caution, and trying to be perfect and scared of being wrong. Some of you guys have this other issue where you hesitate entering trades. If you're a trader on a lower time frame, brother, sister, there is no time for you to hesitate. Zero. Why? Because you have your confluences are for you. Your confluences are not against you. So why are you acting as though these set list of confluences are made to make you deter from your overall bias? They are not deterrents. They are grounds that aid you in the court of what? Trading. Okay? They are grounds that aid you in the court of trading, right? So if you have your confluences there available for you, why are you hesitating? Because if you're trading on a lower time frame and you hesitate, price has already moved 3 pips, and now your risk to reward has gone from a 1 to 5 to a 1 to 2, or a 1 to 5 to a 1 to 3, or a 1 to 4 to a 1 to 1. You see, just because you hesitated, you missed out on the actual opportunity you were supposed to get. So now instead of making 3K, you've only made 1K. Well done, but hey, hesitation costs you that amount that you were supposed to make, but you didn't because you hesitated. Okay? You have to control the impulse. I used to be impulsive, like I told you. So the dopamine drives were clicking in for me. When I first saw my first amount floating in profit, I was like, oh, what? This is 300. You guys see the famous video of me when I first entered the trade, and I said, oh my goodness, $300 whilst I'm asleep. £300, sorry, whilst I'm asleep. Yeah, I'm making $1 million in 6 months. Ask me how long that account lasted. I blew that account within 1 week. Why? Because I had unrealistic expectations coming into this market. Later on is when I made a ton of money. But in the beginning, I had this impulse. So that's when I realized, okay, I need to get in line. Rules kept me in line. You have to detach yourself from the profit and loss. One simple tip I always give everybody. Guys, if there's one takeaway here, please analyze on TradingView and monitor your trades on TradingView. You enter on MetaTrader, cool, no problem. Once you've entered, just monitor your trade on TradingView. Why? Because you will not see the actual monetary value of the trade you're in, whether it's going up, whether it's going down. No, you won't. You just see it from a pure technical analysis point of view. And it aids your detachment from the money. Emotions will always show up. We're human beings, guys. Some of you might have it more. Okay? Emotions will always show. Men, you like to hide your emotions. Women, your emotions are sporadic. Okay? But what women are better at than men, they're actually better at being more disciplined, to be completely honest with you. Okay? Like, I think that there must be some statistics for this. If you give a woman a trading course, she will come back to you with a PDF of notes. If you give a man a trading course, he'll say, let me see what this is about. And a very, very small ratio of men will actually take notes. Why? Because women, when they are actually given something of value and they understand, okay, this is beneficial, they'll pay attention. But men, the first place their mind goes to is doubt. So men and women both have emotions, but women, the advice I'll give to you is hold on to this. You guys are better at building for your future than men are. That's why you find majority of men, they never really attain a certain level of success. Why? Because they spend their younger years just doing nonsense. You guys, as in women, you guys will have your life planned out in your head. Whether you achieve it or not, that's another question. But the point is, you actually show up every day. Majority of women, they actually show up every day. And sometimes that means even them just working hard labor. Nurses, walking down, up and down the hospital, sweating, breaking your back as a woman, you know, just to earn a living, to have this much in savings, so that one day, I don't know, if life goes very, very, very pear-shaped, you have something substantial that you've built for yourself. Women are way more disciplined than men, in my opinion, when it comes to trading and you know, just following rules that's going to get them to a certain place. Okay, so women, just because you have more sporadic emotional highs and lows, it doesn't mean that the man is superior to you. No, in this scenario, I actually believe that women are better traders than men. Those who are actually like locked in and committed. Okay, why? Because the only thing they're thinking about is future. Men were thinking, oh, Ferrari, watch, mansion, this. The woman's just thinking, just my life, my kids. You know, my life, my kids. I want to help my family. Like, she's very driven by her why. The man might be driven by material before he gets to his why. He might say, oh, yeah, I want to retire my mum. But along the way, he wants to buy a Lambo. He wants to buy a watch. He wants to buy this. He wants to buy, you know? So emotions will show up because we're human. We have to learn how to manage it accordingly. So recency bias is very, very, very detrimental when it comes to trading, because you might have success, whether that's passing a funded account and making one payout from it. And let's say after that, you go on a losing streak. And now you think, oh my days, yeah, but that funded account made me this much. That funded, and you keep singing the praises. You keep singing the songs of what used to be. That's going to kill you. You have to move on from your recent W's, your recent wins, and create new ones, because you can. If you've done it once, you can do it again. If you've done it again, you can do it again and again and again and again and again. What must you take control over for this to be a repetitive cycle of consistent profitability? Your mind. The moment you take ownership of your mind, everything else is a byproduct. Profitability is a byproduct. Consistency is a byproduct. Understanding your system is a byproduct. Why? Because you've learned to take control over what? Over your mind. And that way, you will never have what? You will never have what majority of traders struggle with, which is what? A doubt in their system. You're like, you know what? Okay, I made this much. I've been able to extract this much from this funded account. I'm okay with blowing the next one. It's okay because I've made X amount, even though you never intend to blow it. But you're still okay. Why? Because overall, you are still up. Overall, even though you lost a funded account, you've made a 6K payout from a funded account that cost you $500. You're up 5.5K. Furthermore, you're up 6K because you get the $500 back anyway when you make a withdrawal. You see? So you need to understand that looking back at your recent success, okay, you've done it, no problem. But that recency bias, it can kill you if you're just saying, if you act sad about it and you're like, oh man, like I remember those days, the good days. I used to make payouts. What happened? You know. So the market doesn't only test your strategy; it will test you. Your trades reflect who you believe you are. Do you believe you're someone who can make it back? The advice that a friend of mine gave me, Saleh, as you all know, someone gave him this advice. He said that what? Someone told him, you haven't lost your money. Your money is in the market. You just have to go and get it back. Now, someone might clip this and say, oh my days, revenge trading. No, calm down. take a chill pill. Okay? We don't mean this. We mean what? The money's in the market. You get it back by just following the same structure. Some of you guys have this false ideology that repetition equals being stagnant. It doesn't. Because you're so used to this dopamine, you want to feel something every now. No, sometimes it's the boring work. Repetition is the mother of all skill, as you know. Repetition is not being stagnant. Repetition means this is a system that I trust, that it's clearly working, and every single day, I just wait. I just wait for this to happen every day, every single day, and that's it. Repetition. Risking too much or too less. You have to stay consistent in risking the same every trade, because trading is about probabilities. Probabilities and risk to reward. If I now take 2 losses, risking 1%, and now on the third one say, I'm a bit scared, let me risk 0.3%, and that one ends up being a 1 to 10 risk to reward ratio trade. If I risked 1K, as I usually would, I would have made 10K on that trade. And the 2 losses prior would have been 1%, that's 2K. So I would have been up 8K total. But because I risked 0.3%, I'm seeing nowhere near 8K. So keep your trade frequency the same. And keep your what? Your trade risk the same. Okay? You have to rest. Rest is a part of trading. And you need to cut out all the social media noise. All these different mentors that you're listening to, it's not good for you. I don't care if you follow me or another guy or another guy or another guy. Just follow one person. Follow one person only. Why? You need direction. You don't need a group chat. Okay? You don't need this pool where everybody has different opinions on things. And that's normal. Everybody has different opinions, right? That's why it's not good for you to listen to multiple different traders. You have to learn to protect your mental capital just as much as your financial capital. Because longevity is the real goal. And trading is a marathon. It's not a sprint. So everything we've covered, patience, resilience, identity, impulse control, is designed to protect you from yourself so that the strategy can work. Okay? Because without these things, the strategy still works, but it won't work for you. You see? Once you learn to develop and cultivate all of these things, that's when a strategy works for you. So in trading, you don't need to know what will happen next to make money. You only need the discipline to execute, by the famous Mark Douglas. Can we unshare that screen, please, bro? Let's move on to the next. So, going back to the charts, I want to quickly talk to you guys about a trade that I went through. How long do we have left, bro? Perfect. I want to talk to you guys about a trade that I went through. I've missed it completely. Have I deleted it? I think I've deleted it. Have I deleted it? I hope I haven't deleted it. Yes, I haven't. Amazing. So this was a trade I took when 2 trades I want to show you. 9:48 a.m. and I took another one from up here. Okay. Let me show you the first trade that I took. This trade was live in my TPC private community. If I go to the 1 minute time frame, what can I see from here? What can I see? Prior to 8 a.m., what do I have? Unintentional movement in the form of what? Trend line. 1 tap, 2 tap, 3 taps. What can I see? Asia range lies right here. Relatively equal lows found within the Asian range. Over here, I have a high that's led to a low. Price pulls up, mitigates the high that led to a low that broke below where? This low right here. Gives a false reaction. So this is now my what? My early seller's trap. So I'll mark this out as what? My EST. It's my early seller's trap right here. Price induces that. Okay, price induces that. What does it do? What does price do? Price creates a high that leads to this internal low that broke below this internal low. Now, this is something very, very important, guys. Pay attention to this. Price ranges here. Consolidation range right here. Take this as a principle. Whenever a range low is taken out, the high must be taken. And this, I literally did this live. It was a live trading call. Whenever the low is taken out, the high must be taken. So in this scenario, I said, okay, the high is clearly a retail level of resistance. The low was taken out first. This gives me confidence to know that what? To know that what? The high is going to be taken. So once the high was taken, I actually took my first trade from where? As you can see, right here. This wick to this wick, extend right, and the imbalance below it. Boom. But I can see imbalance below it, so I just included the imbalance too. So you can see what? This is my entry right here. I actually got stopped out of the trade, even though my overall bias was correct. What did I ignore? Instantly, the moment I got stopped out, I said, how? Not like impossible, because it's possible these things can happen. I can genuinely get stopped out. But I trusted my system so much that like almost impossible. How? This is such a beautiful setup. I always enter setups like this, and it like majority of the time it goes in my favor. How? I'm confused. Why did I get stopped out? I literally looked to the left. I think it was on a 5 or 3 minute. I looked to the left, and I realized my aggressive entry model was in place. What happened here? This is the Asia high. Price induced the Asia high. What did I see? This overall zone. How do you draw a POI the correct way? From the high to the low of the overall zone. From this high to this high. I literally extend to the right, and on the 15 minute, you see a lovely POI there. What happens? Price mitigates. As soon as price mitigated and I got stopped out of this trade, what did I do? I entered right there. My stop loss goes above. Okay. My overall target was down here, but I closed at a 1 to 3. Why? Because I already got stopped out on where? On the first trade. I got stopped out on the first trade. I didn't reduce my risk. No, my risk stayed the same. I just closed at a 1 to 3. Why? Because I understood that the prior day I took a loss. The prior trading day. So I wanted to make sure, okay, to get my confidence back up, even though I'm always confident in the markets, but to get my account healthy, okay, when I say healthy, I mean to have recency in terms of wins, I'm happy with closing this trade at a 1 to 3. Okay, I think it was just before 1 to 3. Why? Because I already had a GU trade running too. I closed some profit on that before it reversed. Okay, I took partials at 1 to 3 on that trade already. And then what happened? You can see price hit my TP. Why did I close here? The low to the high of the Asia range is where? Look where 50% lies. 61.8. This is where I'm expecting a reaction from. And what do we get? The reaction from right there. At what time? Look at the time. 2 p.m. Why? This is a low. Led to this high. Broke above this high right here. Impulse candle. Candle prior. Wick. Extend right. Include the entire zone. When the candle prior to the impulse candle is offering you an unrealistic stop loss range, what must you do? Include the entire zone. Why? Because the low is very, very close to this low. Take a look at the entire zone. This is the low that led to this high, that broke above this high. So anywhere in this territory can be tapped into. Understand this. Okay? Can we go back to the presentation, please? Amazing. So that's the trade that I took that I wanted to go over with you guys. You see, trading is literally the biggest opportunity to make money online. It's inevitable. Okay, it's the biggest opportunity to make money online. And not only that, but the actual markets and Forex are even bigger than any other financial instrument. You see, with currency markets, which is what I trade, every single day there is over $7.5 trillion in trading volume. Okay. And that compared to the stock market's volume, the New York Stock Exchange, the Tokyo Stock Exchange, London Stock Exchange, as you can see on the screen, 22.4 billion for the New York Stock Exchange, 18.9 billion for Tokyo Stock Exchange, and 7.2 billion for London Stock Exchange. So Forex compared to that is absolutely night and day difference. Big investment banks like JP Morgan, they move over $650 billion daily in a day alone. Okay, so what that does in terms of understanding the capacity of why trading is actually one of the best industries to get involved in, is the level of liquidity that's available for you to make substantial amounts of money. Okay, you have e-com, you have drop shipping, you have Airbnb. All of these are great side hustles if you're able to crack the code. But hey, with trading, just read a few candles, learn to master your mind, and you can print money. Why? Because the amount of liquidity available, $7.5 trillion a day, that's quite unheard of for the average person like me and you to step into this industry and be able to be given an equal opportunity like everybody else. Equal opportunity. Yes, equal opportunity. You get knowledge, you acquire a certain amount of knowledge, you can pass multiple funded accounts, okay? Acquire larger capital. Capitalize off minor moves, make tens of thousands of money. Okay? It's just about capital. Okay? So what does trading the Forex market mean for you? Instant order fills, meaning what? Your trades execute immediately at the exact price that you want. Okay, if you have a good broker or you're with a good prop firm who have good spreads. Tighter spreads, you pay pennies in costs versus dollars in stocks or the crypto market. You can't be manipulated too much like crypto, for example. Crypto is heavily reliant upon a certain tweet by a certain individual that moves price, or a community causing fake news just to create hype about a coin. Here there's manipulation, yes, but we are learned how to spot manipulation. You see, whereas in crypto, you don't know when manipulation is taking place. Okay, so trades in the Forex market are different to crypto. Why? Because crypto, yes, you have technical analysis, but unless you're trading Bitcoin or the most stable coins, that technical analysis is actually quite irrelevant. Okay, it's quite irrelevant because there's no actual backing behind what you're trading. Okay, there's no actual backing behind what you're trading. Trading the Forex market is 5 days a week, 24 hours in a day. You obviously have times where sessions pause. You obviously have lunch hours. You obviously have times where you have your kill zones. It doesn't mean you're trading 24 hours. Okay, so you have the opportunity to make a lot of money, and the price action is a lot cleaner. So I hope you guys understand why trading is better than trading any other financial instrument, like, I don't know, the stock market, or like, for example, options. People put down X amount to make X amount. It's very, very, very psychologically difficult, challenging. So these systems I've shown you guys have been able to allow my students to make ridiculous sums in payouts. Take a look at this. 3.4K, normal. 2.4K, past funded, 22K, 9K, 2K, past 20K, 7K, 3K. Some of you guys here may know me, but for those of you who don't, here's a quick introduction to who I am. My name is Yarimi, and I'm the founder of the #1 Forex trading community in the world. I'm a 7-figure Forex trader who started trading the 2020 lockdown. Yes, in COVID, that's when my journey started. My life hasn't always looked like this. I didn't get into trading because it was cool. I got into trading because I was broke. I was tired of seeing my family suffer. I once had -6 pounds in my bank account. I watched my mom get kicked off a bus for not having enough money to buy tickets. Yes, yes. I grew up on food stamps, low class household, with two parents who tried their hardest to provide for their kids. I literally slept on the floor my entire life. This is no sob story. This is the truth. I slept on the floor my entire life. I never had a bed growing up. My first real bed was inside my penthouse in London, Canary Wharf. That was my first ever bed in a penthouse in London, Canary Wharf, on the top floor where there are no more floors above. Why? Because I felt like I was in debt my entire life. I had to make back all those years of sleeping on the floor. Okay? I got kicked out of university. I got kicked out of college twice. Why? I was always doing side missions to become an entrepreneur. And it affected my attendance. That's literally it. I was always doing side missions. I battled with thoughts, deep thoughts, knowing that my life was going to change, but feeling like I currently don't amount to anything. But I understood one thing that kept me going. Pressure either builds you or destroys you. And I knew that it's going to build me. That's when I made the decision during the 2020 lockdown. And I said to myself, if I don't change my story now, nobody else will. No one's coming to save me. I've got to write my own story. So I locked in. And I went all in on mastering trading while others were chasing signal groups in that time. Like especially in that COVID time, there were so many trading groups. Everyone was chasing signal groups, small quick wins. Nobody actually wanted to learn trading for themselves and be self-sufficient and reliant on themselves in terms of their knowledge can make them money, not this group can make them money. So what I did was the opposite. I actually started studying the Forex market late nights and early mornings. And a few years later, I became a 7-figure trader. Okay. And I paid off my family's debts. I moved into my dream penthouse in London. And last year, I moved into my dream apartment in downtown Dubai. I actually bought my dream car, my McLaren, without even having a driver's license. It was parked in my garage for like 4 months. Okay. And I bought it because growing up, and my friends will tell you this, ask any of my friends, I said to myself, my first car will be a supercar. What? You're going to scratch it? You're meant to learn properly with your first car? Why? You just don't get it. I want to learn with a supercar. That's how I want to learn. I want the mistake to be costly. Okay, so I don't make the mistake. You know? I said my first car will be a supercar. And I bought the car without a driver's license. I made 300K. I made 300K in 30 trading days, $197,000 in 11 trading days. $63,000 in 24 hours. But that's not the most important part. The most important part is what I'm about to build currently with Take Profit Chamber. And the most important part is what I built along the way with Yarimi University. And that's what I'm most proud of. This is what I'm most proud of, guys. We have a community of thousands and thousands and thousands of people. So many lives have changed. And one thing about this community, I'm pretty sure everybody can agree with this. Even though everybody's benefited in terms of trading knowledge, you will also benefit in terms of life. Not because I'm this guru or I'm this old guy that knows it. No, I'm just your brother. I'm just your brother. And I'd like to share some experiences that I've been through in my life or experiences that elders have taught me. You see? So we are able to grow in areas beyond just trading. We're able to have conversations and resonate with each other on a deeper level because it's more than just a trading mentorship. So this is one thing I'm very, very, very proud to have built. Now I'm in a stage in my life, of course, where I have a lot of other business commitments that I have, which is why a lot of my energy is in the Take Profit Chamber with serious individuals. But Yarimi University is obviously the umbrella that everything is under. And we will never stop serving and we will never stop continuing to help people. Okay? We will never, ever, ever stop. And this is something that I'm most proud of. Because this is a global community. I've actually met people from Rwanda. I've met people from America. People from Australia. I've met people from Nigeria. I've met people from Lebanon. I've met people from South Africa. I've met people from England. Barbados. I know some of you guys are here in the chat. So many of you guys from all over the world. It's actually a global community. Started off with just a handful of people and grown into something so massive. Okay? So many of you have grown from being the person who was lost, struggling, to being funded, to losing funded, to going back to being funded and making multiple payouts, from being confused to confident, from being broke to profitable. I'm not here to sell you a dream, and I'm pretty sure you guys know me by now. For those of you guys who are YU members, you guys know we put intent behind everything that we do. I'm here to teach you the skill, the mindset, the systems that changed my life so you can change yours too. Because if I can do it, then what's stopping you? Look at Sadia. Absolute legend when it comes to the females in YU. Someone who I'm so proud of. She's an amazing mother, doing everything for her kids. A mom of 2. She went from losing money in signal groups to making her first 10K payout with YU. And then she went on to make, I believe, over 50K, if not more, in the market since joining Yarimi University. Okay? Has she blown funded accounts? Yes, she has. But overall, is she in profit? Yes, she is. You see? This is someone who's been resilient. She didn't quit when it got difficult in those other groups. She knew, okay, this can work. I've got what it takes. Emotionally, psychologically, sometimes it might be difficult, but I've seen enough to know this works. You see, that's why she's such an amazing person who's seen these type of results, because she's someone who walks through the fire and she comes right back to it and says, hey, I'm here again. Test me. And she makes a payout. Sometimes she walks in the fire for a little bit, but she comes out on top. Why? Because she's built like that. TJ, my boy, Tarek, he used trading to fund his dream of becoming a footballer. Okay? He's made over 81K in payouts. He came to Dubai and he was funding staying in Dubai, his food, his travels, just from trading profits. Literally, I watched this guy live solely on trading profits. You see, here's what I need you guys to understand. The pain of staying where you are isn't going, it's not going anywhere. Not anytime soon. It's not going away. It's actually going to get worse every single day. Every day that passes, your current job becomes less secure. And I know this firsthand. I got fired. Okay. They used to look at me, go on the chart and think, we're going to get this guy soon. And they actually caught me on CCTV trading and they fired me from my job. Every day you wait, someone else takes advantage of the markets and profits from it. Absolute truth. Every day you stay comfortable, the gap between where you are and where you want to be grows even bigger. The question isn't whether change is hard. The question is, would you rather put in a few months of focused effort and work? Would you rather put in that work, applying everything we went through today in today's masterclass? Because the truth is, there's so much more in detail. I can't. Actually, we've sat here for hours and I keep having to ask how long left, because the next subject's going to take another hour and the next subject's going to take another hour and 3 hours. It's going to take some time. But if you actually apply what I've taught you today, just this alone, just this alone, you'll see ridiculous results, to be honest with you. Or do nothing and not change anything about your current situation, which is also completely fine. But you and I know that you're going to regret that decision months or years down the line. So let me ask you something personal. How many of you are done living paycheck to paycheck? Because I'm not about to say to you, oh, join the Take Profit Chamber and you're going to stop living paycheck to paycheck. No, like just genuinely. How many of you are done living paycheck to paycheck? Like you look at the trajectory of your life and you say, you know what? In the past year of working, or in the past 2 years of working, or in the past 3 years of working, have I actually achieved anything? Have I been able to make higher highs in my life? Or have I been in this stagnant position and has the once upon a time praised title of degree that I've achieved now been worn out? Was it worth the hype for me to be in this state of, the rat race? just for me to have no properties under my name, just for me to have no financial progression, just for me to have no achievements for my family, just for me to have no clear metric of progression. My life's just in a loop. So when I say how many of you are done living paycheck to paycheck, I mean for you to ask yourself, like, you're not sick and tired of being sick and tired. How many of you are done pretending you're grateful for your job when in reality you feel trapped? You feel shackled by this work that you are in every single day because you have 30 days annual leave in a year. Sometimes you want to move, but you can't move because if you move outside of your 30-day annual leave, you get fired. Here's the truth nobody wants to tell you. Your current situation is not permanent unless you make it permanent. You are the driver of your life. God is the manufacturer of the car. You drive. Your situation is not permanent unless you make it permanent. Every day you stay where you are is a choice you've made. Every day you don't take action towards becoming a consistently profitable trader is a choice you've made. And choices have consequences. The consequence of not choosing what to do today is that awkward conversation you're going to have with yourself in 1 year's time. How many of you guys or your friends have you spoken to who pitch dreams and ideas, and then later on, a year down the line, you ask them, "Oh, what happened to that thing?" "Oh, yeah, I was going to start it, but..." Excuses. Empty excuses. That's when you realize you haven't accomplished or taken action on any of the things you said you were going to do, so your brain automatically knows this guy is a liar. Because he just says things and never follows through. Never follows through. You will be sitting in the exact same place watching another YouTube strategy video, wishing you had taken action when you had the first chance to strike. The consequence of choosing to do the right thing today is that you'll finally become a profitable trader who is confident in the markets. I'm pretty sure today, just from these few tips I've given you guys are going to walk away thinking, "Oh, yeah, tomorrow when I go on the markets tomorrow, I can't wait. Let me see if I can apply 1, 2 things." And I guarantee you, there's going to be some people in the Discord saying, "Oh, this is what Yarimi spoke about yesterday. Oh, this is what he showed yesterday. Or this helped me so much." It's normal. It's going to happen. Why? Because at the end of calls, boot camps, anything trading related, everybody's on a high. Why? Because the memory's fresh. When your memory's fresh, you perform. But it's because you choose to stop doing the work. That's why you go back to that loop. You see? How many of you are done making excuses and ready to finally become a consistently profitable trader? Consistently. I'm left with 2 choices on how I can end this masterclass. Choice number 1. I could end this masterclass right here, having given you the complete roadmap I just shared with you, and wish you the best of luck. Say goodbye, I'm out. Figure it out by yourself with YouTube tutorials, putting things together, getting stuck on problems that could take days to solve because you have no mentor. And maybe if you're disciplined enough, you'll finally become a profitable trader in the next 3 to 5 years. But that's a long time for you guys, right? Because you want it quick. The second choice is what? I could take more of an active role in your success, providing you with the structured guidance, accountability, and support that turns you into a consistently profitable trader for a fraction of that time. But no, you will not get rich quick. This is the role that I'm playing in people's life right now. Right now, as we speak. As we speak. We want to talk recent results? Let's talk recent results. Ben just made 16K this month. You guys know Ben? You know Ben. I'll show him shortly. Iranio, 2.5K, I think this week, payout. Most people out there will just give you the roadmap and say, good luck, go figure out yourself. But that's not who I am. I've seen too many people give up because they got stuck and had nowhere to turn for help. I watch people waste years actually bouncing between YouTube videos, random communities, and never getting anywhere. Because that's actually what I did, watching YouTube videos and just trying to bounce from leaked course to leaked course because I never had money. Okay, that was me, and I simply refuse to let that happen to you. So I've chosen choice number 2. I'm not going to personally make sure you succeed. Okay, I'm actually not going to do that. I'm going to make sure to give you every single thing that you need to succeed for yourself. To succeed for yourself. Because personally, helping you succeed, that's a given. I don't want to say that to you. You already see it. I'm going to give you the exact roadmap. The necessary vital elements for a person to become a profitable trader in the take profit chamber, the private circle. Over the past 12 months, I spent a lot of time and resources, actual resources, developing this take profit chamber. Why? Because I want to create a group of actual serious individuals, man. I'm tired of unserious people. Okay? And I built this mentorship with one goal in mind, to create a group of serious individuals and help them fast track their way to becoming consistently profitable traders. Not get rich quick, but to fast track their way to becoming consistently profitable traders. And ever since I started this, I've helped hundreds of people do just that. Some going on to securing their first funded accounts in just a couple of weeks, because right now we have just over 100 people in a take profit chamber. Okay, I think around 150, if I'm not mistaken. Others getting actual payouts from the markets. Like Ben, he was able to make £16,000 just this month. Sorry, Ben, I had to use a screenshot from the video that you sent me. My apologies, I know it's a bad angle. And Iranio, who was able to make £2,500 in the payout this week. And here are some more student wins, as you can see. And we have so many of these. I can't put them in a presentation. It will take like a few hours. And look, unfortunately, I can't work with everyone. As you guys know, the first promise I told you guys is that we're only taking in a certain amount of people for the first batch, and we did not go above that number. The number of people that we can help for this month is limited to only 10 individuals, because my team only has so many hours in a day to make sure you achieve incredible results. So I'm only going to be accepting 10 people into the Take Profit Chamber. This is a masterclass only invitation for the first 10 people who take action. Who is TPC for? The private circle, the Take Profit Chamber. TPC is for traders who are serious about becoming profitable, even if they are beginners with little knowledge. The program is designed to walk you through the same fashion I've just done today, but in a way more advanced detail. Okay? In a way more advanced detail, way more videos. We have hours and hours and hours and hours and hours and hours of content. It's for people who are tired of going round and round in circles, never developing a real trading edge that makes them a consistent trader. It's for traders who want to build regular success, not for traders who are looking for a home run. Let me quickly give you an overview of what the Take Profit Chamber includes. This is my high-level mentorship, where I personally host 3 calls every single week. Yes, live calls that get recorded. Okay, every single week. I show you my exact thought process on the charts in these calls regularly, in the live markets too. Not just normal calls, but we have a balance between lesson format calls and we have live trading calls. And I show you my thoughts in the live market, what I'm going through, so on and so forth. Not a signal group. We are not qualified to give financial advice. I just show you guys what's going on in my brain. From time to time, I host trainings on specific topics. Okay, so from time to time, I'll hop on a call and host specific trainings pertaining to something that you guys are struggling with. Every week, we have 2 student revision Zoom calls where students will actually lead the call and share their weekly outlook on the market or go over a trade they took. And we do this to build community and so that people can get familiar with one another and build their own confidence speaking in front of people and actually breaking down the charts in front of people. Okay, you get the new and updated video modules. We have hours and hours of content. A channel specifically made for psychology. You send your message and we answer you with a voice note. We have a psychology tab called Zen Zone. Any psychological question you have, any issue you're going through psychology-wise, we will answer it for you. A channel specifically made for trading logs. A channel made for 24-hour support questions, a private support tab. A channel specifically made for members dropping their trade analysis and getting feedback from us, and whenever they at us, we'll mention where they can go and get a better entry on a specific trade or where they went wrong. They're able to get feedback. You step into a new community with traders that are serious, all on the same journey as you. Some further ahead, of course, helping out, beginners. And there's no ego, there's no pride here. Day in, day out. The Take Profit Chamber is limited to 10 new students per month. Why? Because I personally show up to every coaching call. Me and the other coaches inside personally answer every single question, and I can't do that for 500 people at once. So I cap it at 10. Okay. So if you're serious about this, if you want access to the educational modules, the coaching, the community, the overall vibe, the in-person meetups, we're gonna have an actual in-person meetup this month. I'm actually flying to London tomorrow. I need to book my flight. I need to book my flight for tomorrow. So I'm gonna be in London for probably the next 2 weeks or so, and I'm gonna be hosting a private invitation only event boot camp like this, but in person for hours and hours for Take Profit Chamber members only, and they don't have to pay for that. Okay. My phone is ringing, so let me switch this off. Okay. So here's the access to applying for the Take Profit Chamber. Step 1, you're going to see a link in the chat. That link will take you to an application page. Fill out the application below to see if you're a good fit for my private mentorship program. This short application form takes less than 2 minutes to fill out. If the application is qualified, you'll get redirected to book in a call with a member of my team. You fill out the application below properly, okay? Fill out properly and make sure you're honest with your answers. After you booked your call at your desired time, please read and complete step 1 and step 2. Okay, step 1 and step 2. So it's going to be on a Google Meet. You book your desired time. You be in a quiet place. Our team will reach out to you to just confirm the time of your meeting. And then from there, you will be interviewed if you have good responses on your application. If not, you will be completely ignored. So make sure you answer the application truthfully. And then if you're qualified, we will reach out to you. However, if your application is unqualified, you'll get redirected to another page where my team will call and text you to get to know your situation a little bit better. Because some people might have certain answers that, require a bit more understanding. And for that, we'll reach out just to get a bit of an understanding with regards to your situation. If you successfully booked in a call, here's what we're going to go over in the roadmap session. Because what happens is when you book in a call, what happens is once you book that call, we're going to have a roadmap session. We're going to actually get on a one-to-one call with you and give you a roadmap of how you can, be a part of this program to aid you in becoming consistently profitable. So we're going to arrange a roadmap call for you. We're going to build a roadmap for you, and we're going to ask you about your trading experience, your goals, your commitment level, because we don't accept everyone, so we need to know where you're at. We only work with people who want to commit and advance from where they're currently at. And of course, there is an investment to join. If you get my time 3 times a week, multiple times, and orders Discord, of course, there's an investment to join, guys. We're not accepting every single person. So we have a finance option, so you guys can pay monthly with our finance provider called Split It. And we also have some alternative options there for you guys. And look, I know some of you guys are sitting here, despite everything I've shown you, and there's still that voice inside your head giving you reasons why this won't work for you. So let's address that and what's really going on here. Not the surface level stuff, but the deep, real reasons that keep most people stuck. Some of you might say, I failed before. Okay, if you failed before, why are you going to stop at failure? Steve Harvey once said, if you're going through hell, why are you going to stop at hell? Keep going. That's not where you're meant to stop. You keep going until you see the other side, the bright side. Anything I try, I feel like I fail. I used to feel this way because I failed a lot before trading. I used to feel this way. Keep knocking on that door. You knock on the door long enough, the door will open up. I don't have time. Rich or poor, you are always going to feel like what? You don't have time. If you're rich, you're going to say, I feel like I don't have time to achieve the next million, or to achieve the 100 mil, 50 mil. Of course, this is crazy thinking. But if you're poor, you're going to say, I don't have time to even make the first million. I don't have time to even make the first 100K. You see, this is a universal issue amongst everybody. It's just that perspective is different. That's all it is. So don't blame time. I'm not the smartest. This is a huge, huge, huge psychological barrier that people are shackled by. You don't have to be the smartest when it comes to trading. You just have to learn how to read price properly. That's it. And control your mind. and we will give you every single step to achieve that. I have too many responsibilities. Rich or poor, responsibilities actually grow when you have money. All of a sudden, you take care of so many people. All of a sudden, you have businesses. All of a sudden, you have salaries. All of a sudden, you have expectations. All of a sudden, you have, hey, can you loan me this amount of money? Rich or poor, you are going to have responsibilities. Wouldn't you rather be rich so that the responsibilities of taking care of your children becomes a little bit easier? Why? Because you can pay for certain things. So right now in this moment, you have two choices. Choice number one, close this window, go back to your life, keep doing what you've been doing, keep getting what you've been getting, and in a year's time, you'll be in the exact same place as today. You'll be in the exact same place, wishing that you started today. Choice number two, take action despite the fear. Apply. Just book that call. Book that call, join the program, follow the system, and in a year's time, look back at this moment as the day that changed everything for you. And I guarantee you'll say thank you. You'll say thank you because you're going to gain so much knowledge. You've seen what the Take Profit Chamber offers. Apply now. Book your roadmap session. Go book it. Book that roadmap session to discuss if this is the right fit for your goals and commitment level. Click the link in the chat. You'll see the link in the chat right now, guys. Click the link in the chat. Apply and book a call. Go click the link, book a call, ask questions to our team after you've applied, and make sure your application is good so you actually do end up on that call, because not everybody will end up on that call. Answer it properly, answer it with detail so that you end up on that call, guys. I want to see you guys there. Of course, not everybody can make it, but for those serious individuals, I want to see you there. Don't let money hold you back. Don't let money hold you back. You can make that amount with one payout. It's a very, very simple amount in the eyes of trading. You see? It's a very, very simple amount in the eyes of trading. We're going to teach you how to make that back. Okay? So don't let money stop you from taking a step. Invest in yourself. Whether it's forget it being with me. Anything in life. Anything in life that allows you to level up, go invest in it. Go invest. Guys, when I made money, I actually invested. I paid for a course that cost £80,000 in a year. I actually paid for a course that cost £80,000 in a year. And I was paying for it monthly. Okay? Why? Because it gave me the tools for me to level up. Just mindset wise, business wise, so on and so forth. Never look at the monetary figure. And never ask yourself, oh, what will I get? You guys know what you're going to get is going to be absolutely life-changing information. But you should ask yourself, what will I become? What will I actually become? That's how we want to reposition and redirect our thoughts whenever we look at a monetary objection as, oh, I don't want to pay. Change the word. It's not pay. It's invest to become to make money. Invest to become an impactful person. Invest to become to change. Invest to become to what? To become a leader who provides for your loved ones. Go book that call. The link is in the chat.